Hello. It worked this time. Yes. Did it? Hello. I am Jamie, and this is Tradespotting. Today, we're going to cover GME with a little bit of AMC. After which, I'll listen to any requests and have a look at things, and then get back to GME and AMC for market close. Funny chats there. Is that working right? I think I've got everything working to some degree at the minute. Why are you so stretched, Jamie? Am I stretched? What's up with this? See if I've got the proportions right on this thing. Have I? Huzzah! Right, I've tried making everything as good as I can here. This is what it looks like when I'm big. So, again, prove that. Anyway, whatever, no one cares, right? So, yeah, am I stretched? I don't know. I've got the proportions on as they are. Maybe I'm setting too much of an angle and it's not working. Oh my goodness, the jar just filled up. Why did that happen? What did happen? Chris Murillo joined as a member 6 hours ago. That can't be what caused it. Right, so get everything finally set up. That's that reset. There's the alerts. That volume. Okay, so they're slightly better. I'll still do work to do on that. As you can see, the games have been turned off on chat, so you have to talk to each other or me. If you say at Tradespotting in my whole name, then I get a little orange thing on the screen where your message is, and it's like easier for me to spot. Katie Babes loves the sidebar. Excellent. This is the streaming times, right? You catch me 6 to 9 p.m, give or take 5 minutes. And Rocky, similar deal, 2 to 3. BST, that stands for best streaming time. Did you get some coffee? I did. I got KT's coffee. This time it was the Guatemalan and something. And oh my goodness, I got some coffee. I've been drinking it all day though, so not quite as crazy pumped as I was earlier. Also, there's like a building next door is like finally getting back on again after the shutdown, and they've turned on all their systems, and like everything's shaking in the house. So I don't know if you can hear it, but all my radiators and that have been shaking all day. It's doing my head in. Donation louder than the volume today. The volume we're talking here about the volume on the charts, aren't we? Daniel, cheers, Daniel Gross, for that donation. Oh my goodness, that's awful. Let's have a wee peek-see at this. The 4-hour volume has been better than the previous 4 hours. That wasn't very difficult, was it? On the 12-hour, you can see it's still not even half what it was on the previous, and then on the daily. Oh my goodness, 691,000. Let's round that up to 700,000 is the volume on GME today. Any ideas why the volume is so low? Guatemalan coffee is. Yeah, it is. Tradespotting, your thoughts on the volume, Jamie? Well, it's particularly low, isn't it? It's particularly low. I would say it's very unlikely you're going to see a trend change on this amount of volume. And what is a trend? What is a trend? We're in a period here of like flux, you know. This has come back up again enough to say that this was a low. As you can see, there's the 236 on the ultimate high to the ultimate low of this move. So like within the context of that trend, we're still below the 236 and we're still in a downtrend on the daily time frame, and there's been no change in that trend. Like we can see that hasn't changed. This low here is still lower than back before we drop down again. It's like an 886 retrace from here to here to back up again. And then down here, if you draw that Fibonacci on from here to the low, see there's the 236, comes in at around 179 spot. 178 spot 97, which is where we're at, or just about there now at the minute. And we can see that more clearly down on the 15-minute time frame. If that Fibonacci that I just drew had shown up, we would be able to see it, but it has disappeared. Why is that? Draw it in here again. It's like 178, 70, 178 something, right? You could probably make the Fibonacci I drew more accurate. Let's see. And then on the top side, Paul asked this question. Paul, I think it was Paul. I think a number of people have talked about it just beforehand. If you draw that recent, let's call it a high, right, in at 195, and say we went all the way down, come back, gone above the 236, so you could say like this move, it would be confirmed as like a turnaround, that is a high, this is a low, when you're above the 236, and that, like I say, that comes in at 178 spot something, right? So you, like, maybe it's 82, maybe it's 86, maybe it's 75, maybe it's 64. Who cares, right? The point, if you get 179, that's above it. And as you can see on the 15-minute time frame, that would also be sitting on a 200 period moving average, which we broke through here on the 23rd at around 4 o'clock. Since then, positive trend across the 100 period simple moving average. Above this 55 exponential, above the 100 exponential, and then back down again, test the 200, still got a positive slope on most of these. Could see a better splay, but that's totally natural. You'd expect to see some sort of test of the 200 once you broke through it, and for that to be at a higher low would be very positive. It seems like that's coming in, and perhaps this is like that much volume means there's like, whoop, certainly nobody desperately jumping on any short bandwagon here. Like, that's not happening. This would be an absolutely terrible place to go short. It would be absolutely ridiculous. And if you haven't bought today, then this is likely your best entry. And if it bounces up there, see, there's nothing divergent about these lower highs. It's quite natural that you would see like a retest of the trend, having reached the oversold area, which, as you can see with this red line at the bottom of these, sure it could be more accurate, but probably drew it on a different time frame. Still there. Something like that. 2, 3 touches. Sure, that went down below it, but not. And it was lower than back here. This put in a bullish formation and then turned into an obvious tweezer type of recovery. So, and then it dropped to the 236, or like I've got that fib on twice. That's why that is. There's a bit messy, that one. See, that'd be normal. Also, we had touched the 618 and around the golden pocket up here on this high, so it'll come back, touch 236. That's perfectly natural. It's also like really common on this thing. That's what it's doing all the time. So the volume, which has now disappeared on that 15 minutes, overall, like, you would take it as like confirmation of trend change, like starting volume, stopping volume, that sort of thing, and working back from like an emphatic signal, it gets less and less and less useful volume. And when I say an emphatic signal, I mean like silence can be quite emphatic had price action done something drastic, and if volume hadn't said anything whatsoever, that would be a cosmic silence. But seeing as price action is doing not very much, and seems to be in flux, and because volume's not doing very much, it seems like perhaps people are waiting on the sidelines to see what the trend break is, or not necessarily trend break, reversion, or, you know, the next move. And it seems like people are not sure. No, in terms of like what volume, just looking at it in and of itself at 1 second of any one day isn't going to tell you much, you know. I tend to look at this volume in like subtle types of ways, rather than like in and of itself as a huge part of my analysis. Always comes like third or fourth or fifth. I also think like when you look at it like that, right? And I've just stretched it out, and I know we're only on the 15-minute time frame, but when you put that volume underneath price action there, it seems to be that this is probably what like Morse code operators feel like after years on the job. Like you can recognize somebody else's signature, and in that sense, it seems like somebody is, whether they intend to or not, they're like identifying themselves with their moves in the market, and that's what happens when this pond is so shallow now. You can see everything, right? And you can see here, like there's a little tiny accent on the dots and the dashes. It's all real obvious right here. Every possible area, like, and it all happens in the 15-minute time frame, right? So it's like, unless everybody's somehow coordinated to that unbelievable degree, it's one person. Perhaps there's a couple of people in there, but that's one person, that's the same person, that's the same person. And so, like, that's something you can take from volume. Also, there's no real, like, you'd have to go up and look at it on daily time frame and say, well, what's it telling us on daily time frame? And you can just start pulling in things like the moving average and say, well, the moving average itself dictates, like, the trend on the volume, and it's obviously down. Drawing patterns on it and that just doesn't make any sense. It's there's, if you can confirm patterns using volume, cool, but you can't draw the same pattern on volume necessarily. Like, perhaps on head and shoulders it might look something like that, but mostly not. Usually what you'd see is the resolution of the pattern. That's kind of, and like I say, it's starting volume or stopping volume, and these are the sort of learnings that would have come like down classical charting type of things, rather than, I mean, it's like there's nothing new about volume analysis, right? Nothing new under the sun, particularly about volume analysis. And that's like the gist of it. That's just the gist of volume, starting volume, stopping volume. Peter Brandt is a big advocate of that type of thinking, and so would Rocky O'Croppy. And then again, I would follow that. I would feel the same way. It will spike in a natural way. When you're crazy, right? But yes, Kipo. Streamlabs saying that. Why are you saying that, Streamlabs? That's a super weird thing. Paul B, you have 16 points. That's a big bag you've got there. 16 points. Yes, it seemed tenuous. There's just a single instance of someone saying someone else called the broker. I was told that. Oh, right. Sorry, I thought we were talking about what I was saying. Truck to Maxwell Tradespotting. There was some talk about something called a chill, where the DTCC limits trading on a security, and that it might be active on GME right now, hence the low volume, but no confirmation. Well, how are they going to limit the trading on it? You mean at an institutional level? Like, I wonder how they're going to do that. I mean, it's always for sale somewhere in one exchange or another. So I'm not sure how they would be able to do that. I mean, the Depository and Clearing Corporation, Depository Trust and Clearing Corporation, that would be like beyond their remit, I think. What are they trying to do? A chill? A chill, huh? Sounds like Hocus Pocus. Are you okay, Case? Where is Case? And are you okay? I hope you are okay. Case one, I am a surgeon today. I likely won't be able to complete timestamps. Oh my goodness. Good thoughts. Positive vibes for you, Case. I hope you're okay. What is... you don't have to divulge, of course, but I hope you're doing alright, mate. Shocking. Or if it's not you, then I hope whoever you're there for is doing alright. Positive vibes. Hope everything goes well, Case. And no worries on timestamps. No worries. Like, as it happens, actually, thanks for the heads up, and maybe I should do something like that, like make a note down or something about what time I start doing things into the stream. We're 15 minutes in now, so I could go into the TA and I can say 15 minutes is about volume. I can write that down there. Write that down. 15 mins, intro and volume chat. Okay. Cool. Keeping tabs on what I'm saying. Maybe might make it slightly more staccato. Might make for a slightly more staccato stream, but it's good to get it done. Thanks, Case. And I hope you're alright, mate. And everybody care about is too. And Dayspace, let's get it today. I saw those posts. DTC can freeze it. Freeze it. 100 of you have not liked. Why? Hit like if you appreciate the knowledge. Oh yeah, thanks. So if I got anything from the start of the stream, or if you just want to hit like, thanks. And be appreciated. Cheers for the likes. It's appreciated. And if you're watching this later, then yeah, definitely please hit like. It's appreciated. Right, so we've got 15 minutes in, and now we'll do some TA. 177 spot 69. I know some people will like that just for the lols. We'll go through what we've got on the time frame, starting in the lower ones and working our way up, right? Because we're already looking at this a little bit and talking about retraces and whatnot, so we'll start here. Boom, 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 ba-doom, boom, boom. Let's just be straight onto the chart, shall we? And we'll not have anything else on there, and we'll work our way up. Work our way up and do a wee walkthrough. And then if we're going to do that, then we should just delete everything, eh? Should I delete all the drawings? All of me drawings? Aye, let's delete everything. Boom, there it goes, right. Keep those indicators on, because we'll just go through and we'll use them, which is, what is it exactly it's on at the minute? RSI, MACD, okay, it was DMI, and I've got the EMAs on, and also I'll put on shut up, man. Get out of town, like. Well, this is what we're getting, right? That's what we're gonna start on. 15 minutes. Woo. Okay, so I suppose I should make this a clip too, shouldn't I? Let's do that later. Do another version for the quick one for the people who need that. Tradespotting, you didn't disable the 8-ball. Ah, sugar. Patrick Lynn, if you mean for Jamie to answer that, tag him at Tradespotting. What makes you bullish on GME at this time in regards to the TA? Good question, Patrick. Well, as an effort to answer that question and deliver like a comprehensive take on the TA, I'll start here like I have done with the drawings all deleted, and I'll go back to the overall context of what we're looking at. Okay. So welcome to the TA section on GME for... No, that's not correct. What is it? It's, what will I call this section? Welcome to a deep dive into the current picture on GME technical analysis. At the moment, we'll cover everything from April 2020 up to today, the end of July 2021. Price action went from $2.50 something cents up to $489 and something cents. This is on Nicey, and we're starting on a 4-hour chart so that we can get everything on, but still like a little picture of the detail that's going on here. So price action went up and we had that huge move, and effectively this was now a different company. There's lots of narratives that began at this point, one of which is a short squeeze, another is a deep value investment, and another is just something that like many traders with a neutral perspective on their investments would have been very attracted to. And at this point, not only did the chart for this thing change fundamentally, but the company itself began to change. And that led to this rise for a variety of reasons. Those narratives all played a part in taking us up. And some people would tell you that the squeeze was squoze. Obviously, a squoze would mean that this price was then never, ever, or at least if it did happen, not likely to happen again within, say, a decade. And prices came back 0.5 retrace. And from that, 489 489 something, 483. Some people talk about that level be important. And from there, prices dropped back down to the high $30, $40. Some people got in at 38 something. And we bounced at that point. We bounced and we put in a turnaround that took us, let's say we measure this Fibonacci and take it from that ultimate high down to this low. We say we bounced and we went clean through the 236, went straight up, hit the golden pocket, a little bit of a retrace back down to the 382 on this retrace ladder up. At which point everybody decided, well, if this is true, which it is, obviously it's now happened, and this the reaction to prices afterwards were like a continuation to the top side. Regardless of what you might make of your own particular narrative that may have begun any part along this journey, at this point it was obvious that there was a number of people acting in concert with yourself, even if with an independent mind, and of course in charge of their own decisions, and none of this or any of my shows are financial advice. It was obvious at this point that you were not alone in your beliefs or your market activities. And subsequently, our lowest low since that point has come in at around $116. That was what I would say was this number of price action we've covered, just touching on the Fibonacci's at this point. I'd say that is enough to say that this is both a parabolic move, that's undeniably true. It's also true, I would say, to say that it's undeniable that the squeeze has not squozen. And the biggest proof of that is this bounce here. This one, right, obviously. But for people that are slightly more risk averse, this is like quite strong proof now, right? If you add it to here, even more so. And if this is a different picture now, right now you're dealing with a different company. It's true to everybody that everything that happened back from here to here is in the past, right? The technical analysis is useful in that it gives us a window frame to look through. You know, it gives us like a perspective on the world, and here's the top of your window, right? And here's the bottom of it. And that's the portal through which this thing is now defined, right? There's your low and here's your high, and breaking those two, either of those two, would be very significant, very, very, very significant. And so, with that being your thinking, and if you are looking at this with an objective mind, that's one of the questions you're going to ask. Which of these two levels is this most likely to touch next, or ultimately break? And at that point, you can go and you can say what price action is done here, and we can describe the nature and the behavior of price action and what that likely means with regards to market participants and psychology. But if we didn't quickly look at our indicators and take these on here, and we can say, well, as we discussed at the start of this episode, we talked a little bit about volume. As you can see, there has been no significant change in volume since this chart changed, right? We had this move, which I talked about there. Essentially, we've covered that area of price action now. And then we had this period of time, which was, this was the test, and this here was the answer. And that answer is emphatically heard at this point on the volume. Right, so you had the start of this whole thing, and there's your start in volume. This moved up, perhaps that was the end of that story. That story being that part of this move. Just a prologue, if you will. And then here we had the first chapter. First chapter, as in many stories, what set the scene, right? And it defined who the protagonists were, you guys, right? And like, what taking that move, taking that trade after that retrace in anybody's eyes, and starting what is potentially another parabolic move, is something that's two parabolic moves in a row. All you do is test a 200 period moving average and the 4 hour before it happens again, right? And here would be your bounce, and here would be your test. That sort of thing's like incredible, right? That's the sort of stories that you don't read those to people before they go to sleep, right? So and anyway, right? So back to the technical analysis. After this point, this thing changed, and you've got the questions you ask yourself, right? Is this painted price action? And a critical thought process from that question takes you to the concept of Wyckoff distribution or accumulation. And to understand those two techniques properly takes considerable time. But essentially, you can boil much of it down to the concept of higher highs or lower lows. And if you're a large market participant and you're painting price action on the charts and you intend to affect the market in line with Wyckoff distribution, the last thing that you're ever going to let happen is there'll be a higher high on a significant time frame. And there's significant levels within that process that you'd want to look out for. And the first one is the 4 hour body closes, right? These people are traders at this point in time we're talking about now, right? And I know traders. And so this is it, right? This is what they're looking at. Initially, 373, and I'm talking about a 4 hour time frame. So this extrapolates with a certain degree of reliability over a period of time, and then other considerations will take a greater priority in your overall thesis as you advance along the x-axis. But at this point, it was very obvious, and the prices that they never wanted to see, prices that they never wanted to see even a wick get to, was $378. This is where traders bought the price to a close, and these are the traders that are on the other side of this trade from you, right? Many of them live on the other side of the rich-poor divide, and I'm here to teach you how to trade on that side of this market. And when I say that side, I mean on that side of the rich-poor divide. Obviously, I'm bullish, as you'll go on here if you don't already understand, right? So at that point, that was it, right? And as time advanced, other levels became more important. And when I say time advanced, that's because more significant time frames, higher closes were put in than had been put in before, right? So we came in here, this is a lower high on the 4 hour and obviously on the daily time frame. At this point, you would have thought, well, is this Wyckoff distribution? And an anchor point for that whole thing is that price. It's $279. We came up here, and at the start of June, mid-June, we went higher than that, and both on wicks and on body closes. Our wick was an equal high, was back over here, right? Close enough is near enough. This is a daily time frame. And at this point, that's another signal to someone like myself that this has still got fuel, still got the legs. And at this point, despite the fact that we had a retrace, many serious traders who are very big on technical analysis and are here on the same platform as me on YouTube, who would have been saying that this was absurd, that the narrative that backs up the DD puts them off, and that they don't think that this is going to put in new highs, having seen this concept of lower highs. They would have seen it get to here, and they would have conceded that, well, it wasn't necessarily something that they studied, and it wasn't something they went into in depth. That at this point they'd say, even if there's a retrace, if it puts in a higher low, this thing has got rocket fuel because it's so very close to this previous high. And that's what happened, right? And at this point, there was a degree of calm came over many people who trade the same way I do. Yet those levels of anxiety, as I'm sure, were raised down here, and I tried to be as honest and frank about price action at this point and tell you, everybody, what I made of it, right? So this is how price action went, and now again you've got important Fibonacci's to look at here from this recovery. After the drop on the 20s in February, so prices went up, and so I say we put in a new high. Certainly put in one later, but let's say like we're going on this one, right? It's all very, very, very close there. Like I say, close enough, near enough, right? This was let's take it from here. This was the retrace back against this drop downward trend. At that point, you made it above. Sorry, this was the retrace. I could do that. Oh, look, this is the drop down. It made it to here. Against that, we went back. The retrace against that dropward trend. Dropward trend. Let me just draw it on and say it isn't doing it rather than confuse myself. I did that one. Like, let's just do this one first. That retrace beyond the golden pocket looks very bullish, and then sitting above this 236 down here. Never even playing that. It's not really all that relevant. So skip that one. And we'll say anyway, zooming forward a little bit so this doesn't take absolutely forever. Oops. And touching again on this idea of if indeed it could be a bearish scenario, and this idea of like, let's say the Wyckoff distribution, we never even mentioned that. And let's get rid of that previous fib because we've talked about it. And let's get rid of all the other fibs because it's starting to confuse me. This retrace, yeah, we defeated this idea, went through all here and we covered all that. I'll get rid of that Fibonacci. We'll draw it from this low, yeah, and we'll draw it to this high, and we can see you went below the 236. At that point you were likely to go on for a touch of the 618, but we didn't make it there. Again, it went into the 0.5, which is similar to how this move retraced to the 0.5, and that's bullish, right? Even a bounce at the 618 is bullish, and signifies that potentially that turn has changed. And you can imagine that if you keep going up and putting in slightly higher highs and always only retracing 61.8%, that's like 2 steps forwards, 1 step back. And pardon me, I don't know if you can hear those dogs. Pardon me. Right, so where was I? Yeah, 2 steps forwards, 1 step back. Yeah, exactly, right? So you got a 50% retrace. And that's Dow theory, is that's a continuation of the trend. It's a healthy retrace. And that way of doing technical analysis has been around for a very, very long time, right? It's quite simple. And you're looking at the daily time frame, 50% retraces on a trend. It's a very simple way to trade. Lots of people will be entering on that move there. Subsequently, people were confused. At this point, it was a period of accumulation, certainly a period of tightening price action, and the range without putting in lower lows again, yet not breaking their higher highs. By the time it actually did do that, it was significant, and prices then going up and put in higher than we had been doing here in terms of body closes, which again is significant. From a bullish side of the trade, it sort of makes you seem like, well, from the bearish side of the trade, it kind of negates the idea of taking large moves. And up here, we put in a bearish divergence on the high. It's not quite as obvious, but it's still quite apparent there. A similar situation on the MACD. And we can see the strength of the trend turned a corner here on Rocket Corp's DMI, went down. Right now there wasn't like much of a downward strength on that trend, certainly not relative to its previous. That you can see here, the corridor between these green and purple lines. You can see that's much more contracted now, and so any strength of trend is already negated by the ADX, and then it's that conclusion would be like further strengthened by the fact that there's nothing definitive happening here on the DI plus or the DI minus. You can see that then again it came in with a degree of hidden bullish divergence at this low. And when you zoom in and look at this and say, well, what is the characterization of most recent price action? What does this tell us about what's most likely to happen next? And does that put me in a bearish or bullish posturing with regards to like just a technical, totally neutral with regards to the thing we're trading? How does it make me look at this thing? Well, putting it all in the context of where we've come from and going back again to that idea of volume, you can see that we have not yet changed trend. There's no confirmation of any trend change at all, right? And any of the ways that I would use to measure trend. For a start, I would say like, to say that a trend had changed on the daily time frame, you'd want to see us having broken. This is an uptrend, so you would like, right? It's like really freaking obvious. This is an uptrend. Right, you like I've done this before many times. You can just draw a line through it, right? It's dead obvious, right? It's dead obvious. That's an uptrend, and it's not unsustainable whatsoever. It's very positive, sort of thing. That's when a company first does something like this, like causes all-time highs, like blue sky breakout areas, and then consolidates in and around its all-time highs, right? Which anywhere at around $182 is highly significant, that difference between $2.50. And so consolidation at this area over a long-term trend is incredibly positive, right? So it's very difficult to shake me now from a bullish thesis, right? Because I like to make money because I need to pay for my life, right? That's how I've lived the last very long time. And in order to do that, you need to have certain things that will rule out you ever making stupid ass trades, right? Now, the way I rely on is like these things. One of them is the 200 period simple moving average. It's really hard to say the trend has changed until that point changes. And that point hasn't changed and isn't likely to change. And not only that, but it's had a positive slope on it, and you've got a positive splay on these significant time frames here on the daily time frame. You can see, right, and I'll show you these moving averages. The 9 period is the yellow one, right? That's quite short. A lot of people would have that as 21. Especially up here on the daily time frame. And then the next one, that's yellow, and then the next one, green, that's the 55 exponential moving average, and then this bright blue or cyan, right, that's the 100 period exponential moving average, and then 4 purple 200 period exponential moving average, and then you've got the simple 50 and simple 200 period, which on a daily time frame constitute a golden cross or a death cross. And if you're using a double moving average strategy or a paired moving average, whatever you want to call it, like 50 and 200 are reasonably secure ones to go for measuring long-term trends over a period of time. You want to see the 50 above the 200, and as you can see, here's the 200 and up here's the 50. They both have a positive slope. There's a large distance between them. Price action is currently below the 50 period moving average, but it's absolutely nowhere near the 200. And within context of the higher lows and lower highs, it's higher highs and higher lows since this cut-off period, where I'm telling you this is a different company with different market participants, and you'd have to trade differently against them. Right, if you were trading against them, and like that's what you're doing. So if you are doing that, you are considering it, and these people that are trading against you, they are. And I'll tell you exactly, if you don't know, the way that they're trying to anticipate and manipulate your moves. You can also see on this time frame here, you're above the 100 period exponential moving average. On the daily time frame, you haven't even broken that. Anytime you did come down it, you were sharply back above it, despite an open and close below it, and that might look like a bear trap to lots of people. They also then say, well, that's your moving averages. That's like an overall perspective. It's everything's coming from a context, and you've got some robust nature to what you're talking about there. You know, like the things that I've said, you put significance on, have happened repeatedly and proven themselves to be a pattern that, if not exact, at least gives you a general idea of where things are likely to, how things are likely to behave again. I can't watch long today, but just popping in to show my support and gratitude. Blocked off my schedule to watch tomorrow. Thanks, Jamie. Advance and 8 Pure Legend. Thank you so much for the donation. And I'll also be a busy TA clip will keep less than 50 minutes or so, and put that out obviously around and in around market close. So thanks very much, and that'll be there for you too. And good luck today with what you're up to, mate. We need patience, probably, says Sensory Oaks. Cool. I hope everyone's chatting to each other, and hope I'm still legible despite this mumble TA section. So let's look at this, like the latest signature of these things, and what is this doing, right? Well, is it doing anything similar to what it's done before? Let's see. One of the things you would look at, of course, is price action. Say, has it done anything like it's ever done before? And you'd say, well, yeah. I mean, this high, and then a retrace that's a higher low, followed by like this pincer style tweezer bottom with recovering above significant period moving average, not specifying exactly which ones yet. You could say, yeah, well, it's did it here, right? That was a good one. Obviously, this is a very dramatic version of it. And what happened at those moments? Well, you can see that the ADX was very strong, and took a strong move to the top side there. It did the same here. MACD crossover on the daily was very positive at that point, and RSI put in a divergent low and went up again, which is all of absolutely all of those things are happening now, with a question mark still hanging over the ADX. Like, how does it respond? Pardon me. Going back and just touching on this, because we're on the daily time frame, and I will get into shorter and say, like, during this period and this low that we started measuring the Fibonacci's from, the ultimate low in this thing before everything changed, there was no real signal given on the DMI exclusively, although there was a signal when you combine that with other things and look at how it performed in comparison to, say, for the HBV or whatever, and you could say, well, that happening is similar to what's happening now, right? These things are similar. This move here, this real ultimate low, despite not giving the flash that it did right before the moves on the last two, is like the beginning of the change, right? That came in a confirmation with this volatility swap here. Welcome, Chimp Aaron. And then again, the confirmation came here with this volatility signal. So like there's like a combination of things that seem to be happening before huge moves, right? And those patterns seem to be repeating right now. Like this signal here on the DMI, like you can just look at that, just glance at it, and you can see. Look how things were here, right, underneath where my cursor is. And then look how things here, underneath where my cursor is. Pretty much the same, right? Also very, very similar to in and around these moments, right, which was, if you look up here, whoops, was February lows. You know, it's like there again, you're getting the February low signal now, and you got the previous to that, you're getting the April sort of signal, right? So that like there's amazing. And subsequent to that, you had this sort of signal on the DMI, which you had here, and subsequently you had it here. So if you get that again on DMI, right, boom, right, crazy, right? What do you expect to happen? It's the same freaking thing that's happened every other time, right? That's like how TA works. You then work out like probabilities and like see how robust you can test that and how many instances of it. And the more of them you have, then the greater your sample size, and the more you would say that then can be used reliably within your trading edge in order to make money over time. And like working backwards from that philosophy, which is like respecting the technical analysis, you can see that this is what's happening, right? So that's all very bullish, right? Now I could just like flip the chart upside down and do the whole thing the other way around and talk about like, well, I really wanted this to go down, and look, shucks, we've broke this level, which is what I would be saying when we put in new highs, like this is bad for us, and oh shucks, look, we've broken this level again, you know, this is bad for us, and talking as if you were bears and I was a bear and the chart was upside down, and seeing if how our thesis was working out, you know. And it would be really demoralizing. It'd be really tough, because I'd be constantly saying to you, if I was a bear, shoot guys, we really don't want that to happen. And then every time something does look like it's going in our favor, right when it gets to the critical point where you'd need it to go lower, I'd have to be turning around and saying to you, shoots guys, we failed again. It's turning into a bit of a pattern here, right? And it's so like both sides of this, like looking at it, you know. So that's like broadly answering that question. And then you're on the daily time frame, and you can see, well, what is this, right? It looks very much to me like an inverted head and shoulders. Psychology would match up with it. You're down here on RSI. We were talking about previous trends, like where have you ever seen it this low before? Let's draw this in. There's Alt H drop a horizontal line. And so here, the 1st of April last year was the last time the RSI was at this level. What did that signify for price action? Well, we already know, right? April was this, right? It signified this. Right, so there's your, like, you know, I mean, that's like, usually to a lot of people, that's all I'd need to say. But that's not all the charts are telling us. It's also telling us other things, right? Also telling us other things. Like, for example, if you were to turn on the TD sequential, you would see that the strength of this down move has completely died, and it did it and gave exactly the same signal as it did here and here. And that's more confirmation. And all of those things, together with the fact that this is obviously a higher low and is putting in bullish candlestick formations, means that, like, it's from somebody who's got a time horizon on their trades of, let's say, a few months to a year, right? Which is short term, right? It's not day trading, but it's short term. To say a medium term perspective, right, which might be up to like 5 years or something. This is a screaming buy. It's a screaming buy. And when you look at this and you say, well, if it's a screaming buy, does that mean it's going up? Where would it go to? Well, you'd say, yeah, it means it's going up, right? And well, let's not compromise our own technical analysis, right, by like trying to extend this initial move. Let's instead talk about everything since this red line, which is essentially what my TA does, because I want to tell you the truth about things, right? It would be the retracement against that move that you would be measuring, right? Again, everything you would take would be from this top to this low, right? Because we've not broken that yet. If you go back to what I was saying at the start, these are the porthole with which we're looking through. And when we break through either, it will be a crescendo, it will be a massive smash, it will be like a huge raid, completely and utterly destroying this framework that's around the chart at the minute. And it'll come if it's on the top side, it'll come from this Fibonacci, right? It'll be an extension of the moves of this one. Where prices went woomph again, woomph back up here. So like, and where do you take that from, right? Either you do it on this retrace with this 50% touch, or you do it from this move up here, which then came back down, and say, well, it hasn't then put in lower lows, so where does this go? And that's the one I would go from. Here. Here, top of it, here, and I'd say, right, this is the down, right? This is which is like, here's the new face of this company is, right? This is never getting lower than this again, or it's never, or the other people say it's never breaking higher than here again. These are the two levels it's put in, and since then, this thing's changed. Since anything previous to that is different. So break into the top side, just like totally and utterly, regardless of any narrative. Now, I'm not saying that to dismiss the narratives, because there's just so many of them, and I don't want to like tie price action and let's call them targets to the top side, because I'm talking about like areas to reach as opposed to places to take profit. That's not what I'm saying right now. I'm just saying what might be a natural evolution of this chart. What's the chart saying would not be, in retrospect, looking back, what would not be overly dramatic, despite how it might feel to you psychologically being in this trade, right? What I'm going to say is not dramatic, right? It's muted. So like the targets in that context of what I meant, right? A really muted one is $1,450, right? Within that same and completely within the same boundaries of understanding, and without, again, no difference from those two levels, the top side of that muted move is $2,250. That's just how this technicals for GME are. That's just it, right? That is it. That's how this works. That's the bullish thesis based on a very muted and modest continuation of a trend of all the signals and all the patterns that we've seen. an oscillation of that nature would not break anything that we've done so far. It would just be a continuation of a train already in motion. And that's like a high level architecture of the GME price action at the minute as the charts speak to me, mostly on a daily time frame, which is significant, it's robust, and I used my technicals, which I find have over the years proved to work for me, and I suggest like that if you were doing something similar, you'd probably come to a similar conclusion as to I have. And I invite a critique of this high level view. I do, from anyone with any experience whatsoever. Or anything to say about the signals I've got flashing, screaming at me in my mind right now, right? Like, and I'm not going to talk about all of them, but if you know what you're talking about, then like you'll be able to see what I mean, right? You'll be able to see that. You'll be able to see these things, right? You'll be able to see this. You'll be able to see all that, and you tell me how, with the repetition of that. And I'm not talking about fractals. I'm not saying like past repeats itself, but past is a prologue. And if you're using technicals, you'll be of a similar philosophical approach to me. I'd invite criticism of this TA, especially from people with experience. And I too would meet you halfway and say, well, here would be where my thesis would be defeated. And I'd invite you, if should this be you, to tell me where you think your thesis would be defeated. And then, just to sum up this segment of the show, I'd tell you where I think you'd have to admit that if you were going bearish on this, would have to admit you're wrong, right? And that's when we go to the weekly time frame and we stretch this out and we can see, stretch this out and we can see, we've talked about all of the different indicators on the weekly. It's even similar deal. It's even better. And you can see, well, there's this body close, these wicks, and this wick, which comes in exactly at our previous body highs. If you drop a horizontal line there, and then on the bottom side, you can already see the daily line we drew on the daily, this long line at the bottom here, right? This is our demand line, and this is where people are buying this thing. We've even identified on the volume that there's singular market participants with huge deep pockets that are on our side of the trade who buy every time there's a low and it comes in coincidence with where a confluent where the price action touches this line, right? Now this is a weekly time frame and it's a diagonal line. So there's few technical analysis that are as dismissive of diagonal lines as I am, right? They're not worth shit, but this is a weekly time frame, so it means something. And we covered the horizontals, and here's done on the top side on the weekly time frame. If you open and close a weekly candle above that, and you're bearish, my friend, you are going to lose so much money if you don't close your trade. Tell me I'm wrong, right? Tell me I'm wrong. And you want further confirmation of that. Just to completely and utterly defeat that argument, to show you that why I've been saying for so long that 343 on the weekly time frame is big move time, right? Now getting there is a huge rise from where we are, but that's nothing, mate, right? Keep your knickers on, right? That's nothing, because a weekly open and close above 343 on a go figure fannies, right? Point and figure chart is breaking this line, right? And this is how true Wyckoff theory works. It's using point and figure charts, not the phase changes that you've been cobbled together on a log or linear chart, right? The truth is, Wyckoff theory completely removes the x-axis. This stuff down here, right? That's pish. That means nothing. If you get another one of these just equal to this, the whole idea of Wyckoff distribution has been destroyed, and it has, if you're a believer in that, you're going to have to flip long, because this is Wyckoff accumulation, my friend. Higher low, higher low, higher low, right? Continued strength of trend. You match that up with the x-axis. I'm sorry, but you're wrong, right? So not only are you wrong, but this looks like it's going to go parabolic again. Looks like it's going to go parabolic again. Uh, and there's only there literally has never been an asset that's done that. There has never been a chart where an asset has gone parabolic twice, apart from debatably Bitcoin. And if we're talking about things in the realms of Bitcoin, well, its most recent high, that if you don't have to be very long in the tooth to remember, is up at the high 64,000s. And all of those things add context to my approach, right, which is a robust approach, which is based on a zero hypothesis, testing against the mean with a scientific hypothesis, right, a reliable and testable approach. That's what this is. It's neither hocus pocus, astrology for men, or anything else. Those things are said by ignorant people who aren't capable of doing this. And why is that? Well, it's because 90% of all people who trade, especially retailers, right, but 90% of all people who trade go bankrupt within 6 months. The vast majority of people who make it to being a successful trader will go through phases of their journey will lead them to huge liquidations, perhaps several times before they learn. And even on the level of the most professional and the most experienced accounts, fund managers only ever make money on average between the high 40s and the low 50% of all fund managers in any 1 year will actually make money. The most intelligent people are drawn to the charts like moths to flies, and most of them get burnt. So this isn't easy. And so if you're saying like the reason people are doing it is because they themselves are crazy, the truth is that's a failing in yourself to approach this topic with the seriousness which it deserves. And that's on you, mate, and nobody gives a flying fuck about your approach, because everybody knows that it comes from a place of ignorance. So that makes your case of trying to convince people that TA isn't valuable, like you're starting from somewhere impossible, and trying to convince people that have already been on a journey of learning, so they're like infinitely far ahead of that conversation. And in fact, the truth of this is that I'm not doing this for any benefit to myself. The reason I'm here now chatting with you guys and putting this information out there of stuff that I've spent years learning and trying to distill into packages that can benefit you, months, weeks, hours, certainly, weeks and years of effort can somehow be packaged and given to you in a way so that you don't necessarily have to go through it all yourself, so that you too can see that it's not too big a world out there, right? It's not too small a world out there, is probably a better way of saying it. There aren't too many people. There are not too few opportunities. Even despite the fact that this arena will present you with infinite risk and incredible potential damage to your life, it's also true that if managed correctly, you can empower yourself. You can learn how to change your environment. You can have a meaningful life, right? You can. Not just in your reward, but by seeing that you can control yourself within your environment to make the most of those opportunities that you're presented with. And this is a huge opportunity for you to watch along and learn this stuff and to be involved in this trade. How you want to play it is up to you. This isn't financial advice, and nobody can tell you what to do with your money. But Tradespotting channel is an effort to be that place where your hopes and dreams will meet ends and means. And like I say, I also want to reduce people's levels of anxiety. It was a message that I learned in a profound moment in my life. And to pass that on seems like a worthwhile experience. You don't need to worry about this. It's all good, man. Yeah, and there's no help in rushing to be rich and plenty of wealth in waiting to be right. So you try and overlay those feelings, those philosophies, on the fact that you and I are really quite angry. Also on the weekly, you can see, look at this. This is a beautiful positive splay of these moving averages. Everything's exactly where you'd want it to be, and price action is resting on the 21 period exponential moving average, having been consolidating at its highs. That alone is all the technical analysis. Right, so back down the 50-minute time frame, and we'll go on and look at other things in a minute. On this retrace against this downtrend, it would be nice if we could open and close prices above that 178.84 or whatever it might happen to be. It's actually 179. So if we can open and close above there, that would be great. And I'd like to see us go back up and test these levels at 186 or so. I anticipate something like that would be possible. We'd need first to put in some sort of higher low. The areas where you would anticipate those attacks coming, just briefly looking at this and going across at the horizontals, is the wicks down here. I wouldn't really put much weight on this particular low, which we're obviously in and around at the minute, right? It would be further down at 175. 176 spot something, and then down, obviously down here a little before, which would be a full retrace of that silly little fib that I just drew, which itself doesn't necessarily mean anything. It'd be around 173 spot 92, and on this little volume, that means that very little people are taking transactions. It's also likely true that the books are very dry or shallow, so like pushing an order through likely clears the books quite a bit. This volume's so very low, and like hitting these moves, like just anybody to do anything, it's likely to move either way on this thing. This golden pocket area above us is significant, and so the staircase up the way is really quite like lined out for us, as is the steps down should we go that direction. Breaking below this level, well, we look left and you can see that there are significant levels here, right? Falling into this formation again, does that mean that it's fully played out its move and this is the high that we were likely to see, and that in itself is a failure of break our previous highs? That's something we'd have to look at. And does this trend continue that we've been in for the last number of weeks? There's nothing to say that trend has changed yet, other than the fact that it's meeting us at this area here. We're on the 4 hour, we've dropped below, tested the 400, and the 50 period is meeting the 200 period moving average here on a 4 hour, and putting in what would be a death cross, right? And when that happens, you've had one test here of the 200 since we've been below it, and does that constitute a test of this cross? Possibly. I'd expect prices to have come back down and tested their lows, should that have been the case, before we came back here, and instead we're maybe perhaps consolidating in this move, right? Let's see where that move is actually. This being your low, this being your high, and extending this across to the right so we can see it all. Your 618 and your 6.65 down at 171, 172, 170 spot 47. Like, that would be a 618 retrace of this move, and having failed to break your previous high, that wouldn't be all that bad. We're currently sitting on the 0.5, and you've seen yourself that after we've dropped down, gone up again, and come back, if you were looking at if you arrived here for the earlier part of the TA when we did the like greater picture walkthrough, you'll know that the 0.5 retrace on like a move back after a recovery is like common for this thing to go on again. So it could well be that, like I say, that this is the best entry you're likely to get today in and around these levels. Biology, the next steps below are also very close. And this 618, 6.65, that would be natural for most assets to do things around there. It would only be beyond here, you'd be looking down to these levels. And at that point, you might think, well, shorter term time frames might then match up with some like hourlies, 4 hours, and that trend comes in with testing these lows. It's also maybe got a bit of room to go before it touches, pardon me, ambulance, before it touches this trend line. Does it have more work to do before it goes down with regards to touching the 236? Quite possibly. So that's what we're looking at, and from those time frames, you're down at the 15 minutes again, so look and see, like, well, let's see what price action is doing right now. And this area sitting above, breaking below the 200, you're likely to test that again. All these moving average crosses you're likely to put in test of then. You can expect to see prices in flux. You can see that the ADX is strengthening on the DMI, and the downtrend is also strengthening. So is there some form of move coming here? It's only just made it above the center line. You'd like to see a retrace or a test of that. The DI plus is pointing down as the DI is up, so not great. And then perhaps a test of this area or lower is natural, and then down below here, that would be this calling in here, like calling in at the low 170s as you test the overall trend on the higher time frames and this golden pocket area. Perhaps putting in another touch of divergence with a lower low on price action, but is that potential? Is that possible? But not a lower low on RSI here, 23rd of July, in a 15-minute time frame. But don't know. Could easily be similar to this. This was significant at the time, so might be here's where you're looking to compare it to. There's no trend to base off that. Go back up just because I'm here. Move that out of the way. Yes, so like it would be to move up. So this head and shoulders, similar thing here. In RSI, you've still got your inverted head and shoulders, and that could be anywhere, right? That could even have been here, was that shoulder. So do I expect prices to come back? It's still above the GME on this one, touching the center line and coming down. You'd like to see it reaccumulate and put in some sort of trend. May well be that it does that, some sort of bounce here, some sort of bounce there, reaccumulating around this above the oversold zone, and then you've got this head and shoulders on the go. I know this is a 4 hour time frame, right? So you build this into what I was saying before. This looks good, right? This looks good, and I know it's counterintuitive because it involves me again saying prices might drop in order to do this, but it initiates these sort of moves, then all for the better, and I don't trust head and shoulders at the best of times. So I would be looking at it and thinking like, well, where is it? And here it's hard to draw. It really is. Too soon to draw it, but it would look something like that. This is the way I do them. This would be where you'd be then anticipating the bounce, and if you got the measured move of that, you would discount this slightly higher one, take it from here to this low, put that on, say that let's be let's dip our toe into reasonable land again and say that comes in at the lowest end where that might likely happen, in around here, and breaks up from that point, which means that it itself could slip below here, and then at this point change the trend, but we'd see the trend on price action move up, and that would be represented by a move in the DMI, or sorry, the RSI, and that just to taking us above the center line, not even testing the oversold zone. That's like bread and butter, this sort of thing. Like, could happen here, could happen here, could happen here, could happen on a retest of this, could go below and then bounce up, but that would then look like an inverted head and shoulders on RSI in a 4 hour time frame, and it's a 50-50 chance that comes true. And there's other reasons, again, like I say, for a bounce at any of those reasons. That first one could be this 50% retrace, the next one could be this low on the wick, and then, or else it could be the 618 and the 6.65 retrace, and so all of this is like that. And then you were going to 4 hour time frame, you want to draw that in here. Where's your head and shoulders come from? Like somewhere around here. That all would match up, right? Maybe you'd even draw it that wick there if it was the worst case scenario we outlined before and say there's where it meets it. No. 4 hours, some point this week perhaps, meets this long-term trend, test those things. So many reasons for it to bounce, right? That's like all of those things say. So despite the fact that that might not be what people want to hear, right? Some people just want to hear it going up all the time, and they say TA's all like that's what I should be talking about. It's just that side of things. It's like, well, I understand where you're coming from, and you want me to put out a positive message and whatnot, but like, although it's like sometimes harder to eat, right? This is more positive. If it can do this and then go on, that's more positive than it just doing it from here, right? I've improved all these things. As you know yourself, right? Test your metal, then be more reliable later on, right? That's how people view you. It's the same with price action. And then let's go on and say, like, well, if this move's successful, and if it does go through these ideas of the head and shoulders, and if that target on RSI is also reflected in some way, somehow on the price, what would that be? Well, above you, you've got these levels at 195. That's like the top of this little range where you previously draw the down, the taking this retracement from. Off of the top of that, like successful targets on it, the 1414 and 1618. Top end of that's and again at the low 200s, like 200, 001, 200 and 16, like all of that's in and around those sort of levels, and that isn't even really breaking structure on a 4-hour trend where you can see that there was so much activity in around here, right? And these would be higher than those prices, like the 220s, 230s, and so that's like within the realms of like, could it happen? It's like then you're like on the verge of asking a silly question. No, they're not possible. That'd be very close because it would be completely and utterly within the context of this thing. It'd be really, really, really typical. Nor would it change structure or change any real market participants' thoughts if they were in a long-term trend. It would defeat anyone who would open a short position anywhere below here or alternatively here, and that's very important because there are people that are shorting this that think that this is a crucial level, and they're right. It is on horizontals and Fibonacci's and subsequent to the patterns that we've put in since. So they'd be right in thinking that this is a significant level, and I'd agree with them. So if anything from the start of this show until now has been at all valuable or helpful to you, or you think it would help somebody else, or you've enjoyed being here, please hit like. It would be appreciated. Thank you very much. Anything that anybody ever does for the channel is really, really appreciated. Thanks. So then down at 15 minutes, 177.60, and price is taking a little bit of a move there. You still want to recover that area at 178.77 with this Fibonacci to say 178.84 plus the 200 above there. Itself is a lagging indicator, so its exact place isn't important. 236 gives you more of an idea. The 21 period moving average being in around the same place, this draws the eye, and so it'll also likely draw price action. So price is up at 178 again. Let's see. Let's also then say, like, we can tell that the DMI isn't telling us anything positive, right? Now, to still tell us information, we're going to take it off, and we're going to take off the MACD because we covered it comprehensively the other day. Keep volume on there, even though, it's literally invisible. In fact, what I'll do is move it up to that panel above so you've got something to see. And we'll stick this RSI on bigger so that it's easier for people to follow along with. And we'll see what's going on here. "15 minutes, matching up with this inverted head and shoulders. You do have some trend there, perhaps on the bottom side. Suppose if you're going to use this type of nonsense, you'd also have to do that, but that's stupid, so I'm not doing it, don't care. 1, 2, 3. Yeah, likely. Nothing emphatic happening yet from that. It's testing the oversold zone. It's done it here once before it went down. It's natural that when it gets near it, it would be something that gets picked up, oversold. It's called that. It's a stupid name. But does it last? Not necessarily. No real reliableness on this. Nothing to rely on here. Expect to see test these areas. Does it go lower before it does that? Well, there's this reason for it to not do that. And there's no desperate reason for it to do anything different. This lower high is lower here. This divergent, no. But then here, yes. So your lows on the RSI, so people would be looking at this and trying to measure divergence between these things, and it's true, right, within this formation there's a bit of that to be done. Even on this 15-minute time frame though, it's clear that well, you might see these patterns of higher lows, it seems, on the RSI. The real lows you're looking at when you do these things are price action lows, where you then compare the lows on the oscillators, right? You take the lead from the price action. Price action is king. And in here you can see these are the lows, and what you're hoping for is this a low, and in which case obviously it's much higher than back here. So what you're looking for is, on this context of this, from since here, higher lows, is it an uptrend, is it a downtrend? It's very difficult. Looking for divergence, gain. These time frames you're not getting anything, so we'll go up to hourly, keep it in mind. You see there was that potential head and shoulders on RSI there. Have to be like that. Say this looks like it's on the hourly. Perhaps it hasn't managed to do it what we'd like. Did do above the center line, coming down, dropping down below that. It's not great. Could then again drop down. See it. RSI test 36 on such low volume, that'd also be possible. Peace out, Sensory Hoax. Are you? What's up? How's that going? I noticed you'd said something earlier. I want to talk to you, but I was too busy doing this stuff. Now say that it's as if you're leaving. So if so, sorry I missed you, and I hope you're doing good, mate. And I'll get to the chat in a second. So these things, what these things are saying to me, and there's tiny time frames, medium time frames. Oh, can I call it medium? Psst. Suppose. High volume, you really don't need to be like that. Wow, everything's just going wrong now. Suppose we can now see it when we could never have done so before. Maybe there is some benefit to that, so let's just leave it. I'm not going to fight the fate here. It's not telling us how much it is, but there's the bar. Ah, no, go away. Right, bye. So yeah, and I'll drop. I went up here for a reason. So what is it in terms of higher lows, lower highs? Here's this is this wick low. Would I compare that? Yes, I would probably, and see what's happening there. Even, slightly higher on price, not really. Below the EMA here. It's not bullish, Is it rolling over though? Not necessarily. The question is, what does it do? This area here, still the persistent question. If it gets there, question is, what does it do? And my idea is that my strong feelings are that you'd see a bounce. At very least, you'd see a bounce that then comes in to test this 236 above where we are at the minute, or subsequently comes in to test 186 again above where we are at the minute, but nothing dramatic. I'd totally expect to see that a move between these two golden pockets should it happen, and I kind of anticipate it happening. So that's the GME TA, and from very different angles. Cool. So if you've got any questions on anything I said there, we can cover them. Hello everybody in chat there. How many people have we got watching? 362. Awesome. That's slightly higher than normal. So if you want to do or see anything, feel free to go back to the start of the video. After 15 minutes in, we had the first 15 minutes of the show so far today. If you've not tuned in from the very beginning, we talked. It was just a really quick hello, and then we talked about volume, and it's from a perspective of technical analysis, and looked at the volume, and then after those 15 minutes, we started answering the TA from a question in chat that was, I think, Patrick Lynn, who'd asked, why am I bullish on from a technical perspective right now? And I tried to give like a very, very sterile scientific perspective on the technical analysis from the perspective of somebody who like maybe doesn't give a flying F about whatever it is they're buying, right? Like it could be anything. Just someone who doesn't care, right? Like most traders, you ask them what they trade or what type of trader they are. And the good ones, like in my experience, will have always said like either not answer that question, or I'll have said, I'm a trend trader, I trade the trend and I'll trade anything with a trend. Paul R, can you look at CLF again? We were 100% right the last time. Yeah, cool man, no problem. You betcha. What else have I missed here? Aaron Pauline. Short positions can have infinite losses. In my opinion, anything under 40 million a share is paper handing. Not financial advice. Love Tradespotting. Yo, Aaron. You've got very high targets. Good to see you, my friend. Good to see. Best way to do TA is to keep doing it, you know, and like they'll tell you, the charts will tell you if you can listen to them, they'll tell you what's coming soon. Tradespotting watched the one band, one sound live stream with TMI and Short the VIX and Houston, and it freaking ends at 27 minutes in the middle of TMI talking. Yeah, I'm not sure. I'm not sure how long he intended the thing to be, but it seems though that one's like the end of his video is being cut, maybe in the upload and the processing or whatever. I'm still like, I don't know what happened. I haven't spoken to him about it since, but I have talked about it loads because most people who've seen it have been like, wow, that was amazing, and also it ended abruptly. And that feeling that people have is probably he'll have that same frustration. And I think that either I haven't spoken to him about it since, but he might either put up like a part 2 or cut it into something else that comes up. I'm not sure. He's very good at what he does, so I expect it'll be good when it's there. And obviously he'll be aware of the fact that the end wasn't on. I'm sure he'll be as disappointed and frustrated as yourself. And there was good bits in it, you know. There was like he'd already shared clips from later on in it on Twitter, which I had retweeted and thought were like awesome little bits. So hopefully he gets that back in. And like I'm sure one day I'll be on with him again because he's a really nice chap, and he's sensible about the way he goes about things, I think. And so I'm sure I'll see him again. We'll have similar chats in the future. And I like what he's trying to do. H. Jones, Rocket, nice one. Drinking stream tonight, Cosmic Light War, Tradespotting, Minner. Look, I so much of a hard time about those recent drinking streams. I'm not sure. Also, Rocky's totally not in a position to be doing anything like that. So I can't do it with Rocky. Could do it just me and Cosmic, I suppose, if he was up for it. But I don't know if it's going to work. Like, I don't know if they work very well. They don't necessarily work for some people. Maybe I could do it and it would be like members only, or maybe I could do it via the Discord, or maybe I will do them. Sure, I'll do them again if we get the right format and the right setup. It's just at the minute I'm a little bit reticent of doing anything that would put people off, because it used to be 1,000 people watching and now it's like a third of that. And today's a good day because it's normally a quarter of that. So I don't know what to do. Like, but you can let me know if you'd really like that sort of thing. Then I'm sure we can build it in somehow. And if like the greater audience would actually appreciate it, then sure, no, I'd like to do it. Right, it's good fun. I'll go back to the beginning. I just woke up from working all night. Good on you, Space Monkey. Well done, man. Or lady. Congratulations on getting that under your belt all night. Sheesh. The start is good. You know, I think it's probably helpful to some people who tune in exclusively for TA, or anyone who's anxious about price action, or and it's done from a perspective of somebody who'd be looking at this on like a weekly and monthly, and then thinking about their investment in terms of months, weeks, months, and years, and how that'll look and so on. So it's maybe useful for people, especially in this period of consolidation and price action, where not drastic things are happening, and so they might themselves be bored, and like a good opportunity to pick up on little things there. or frame your own thinking, and that, like I try to deliver things in a helpful way. But at the end of that, I was getting really angry. I was getting really angry as happens because I was about to start talking about more things about the people on the other side of this trade and that, but just got myself at the end so that I can keep this educative. Whoa, who said there's a drink stream tonight? Can't wait. You winner M's try to like get the whole hype train on a go itself. No need to make it crazy long or get crazy drunk trades brought in. Just an easy chill session, some music or gaming. It's a good idea. I like it. I'm sure we'll try and fit something in. I just don't know if tonight's the night. Tonight's Tuesday. Definitely not tonight. Weezer, Tradespotting. Have we talked about how Jeff Bezos and Mop Branson may not get the astronaut title due to the FAA regulation changes? Yeah, they ain't getting their wings. No wings. I think there's like you have to have demonstrated some scientific endeavour, and the people that came back in Bezos's one said, yeah, it was fun and all, but they had criticisms of the thing, you know. Allegedly, the thing's too small to really do much in, so feels like a bit of a waste of money to me. It certainly doesn't sound like anything scientifically significant is being achieved or even attempted, and so I don't know if he deserves it for essentially having money. It isn't really a reason to be awarded with other things, I don't think. Like, the experience that he got to have should really just be enough. Unless he's like a crazy overblown narc, which I'm not saying he is. In which case, then he'd probably really desperately want those wings because, you know, having billions and billions of dollars isn't enough to make you. I don't know, right? Either of the two of them, I'd feel that way about. Well, I would praise their efforts and contributions to engineering, obviously. And hey, I'm not against people having money, just, you know, seems like some things are a bit of a waste. 343 is a meaningful number for me. That's how many first responders died on 9/11, and I am a first responder myself. And you have been working all night, and wow, doing the Lord's work, or at least like massive brownie points, I'd say. Well done, Space Monkey. Good on ya. Nice fought there too, in some ways. Bird Beer, all is good, friends. Cool. Not tonight, maybe Friday. Yo, there he is, the legend himself. Yo, Cosmic, how you doing, my friend? Good to see you, buddy. JT858. Hi, Jamie. A bit of a general question. How do you tend to come across opportunities like GME and Rolls-Royce? Is it a case of flicking through all of the charts? And well, not really, you know. Like, how did I come across GME? Well, my uncle, who is a trader, sent me a message about, we often do chat about things, about various things, and part of it he talked about GME and that ages and ages ago, last year, and I thought, like, well, you know, in the context of lots of other things, I thought that's an interesting email, and had seen that Seeking Alpha had said, you know, this looks like a long, and I don't say I put much weight in them, but you know, there was like a series of things that got me thinking about it, so then I was in it, but it was like a reasonably insignificant position, certainly compared relative to the rest of my portfolio. Like, it was quite small, which is quite a benefit, right? Because it meant that I didn't really even think about selling the thing ever. You know, there was no need for me to do it, right? Like this whole thing was immediately more interesting to me than the position size I had in it relative to the rest of my portfolio when it was at its high. So I was like, great, you know, this seems like a long running thing to me when the retrace went as I expected. So so that side of things, like getting interested in stuff, is actually like a continuum itself rather than like a specific event. You know, like, well, it's like the questions like how did you fall in love with the person that you love the most in the world? You know, if you were to go back over it in a couple of years subsequent to the event, you might say that it was a series of things, you know. Like, how did I first meet somebody? Sure, you can say like I did, like my uncle introduced me and I later subsequently saw a newsletter, and then perhaps something else, a third thing somewhere triggered me to think more about it, and I got some, and I was in like November last year, and then thinking about GME. And that's how I met that girlfriend, let's call it like that. But like not meeting them's one thing. Like how did you fall in love with them was like then again the whole process, which all of you have shared that with me. You know, you go your whole perspective on GME might have initially been like, here's a way to make money. That's what I think most people in this got into it for. Here's a way to make money. Even if that came after like an inflection of where one of their friends or somebody had said in like February or March or something, yo mate, hedgies are fucked. And they're like, I can really do something about that, awesome. And then they got involved. Even then, that point in time, it was awful lot of it, everyone, myself included, was thinking like, this is either, you know, put it like others have done, this is a deep value investment, or you know, it was about making money, like that's it, you know. And it was that exclusively until people started trying to destroy the whole way the world works. Until that happened, until their behavior became obvious, it stuck like that. It was still about money. And now, well, like it's finally like given, like it's like when that moment when you realize you love somebody, like when you really love somebody, when you don't want to possess them or control them, you just want to be part of their story or help their story, help them live the best life they can. And like, that's what it is with GME. I want it to do as good as it can. Jesus Christ, I don't actually love it. You know, it's not. I'm actually not actually marrying it. I don't need to get so emotional. Just filling in for Daniel since it seems he's absent today. King Noah! Whoa, you're outstripping him with that. Thanks very much, King Noah, legend. That's great. Thanks for supporting the channel. Buddy. What else have I missed over here? That was really good of you. And thanks to Michael who subscribed and JT858 who asked that question, which I don't know if I did a good question. I did answer it. How do I come? Oh, and yeah, and how do I come across opportunities generally in charts? Right. Well, it'll be something like people talking to me about it. Like, you know, I can't put it down to this exclusively, but I can tell you one of the reasons that I'm so interested in Rolls-Royce is because somebody who used to work for them at a really high level now works for somebody else that I know, and they were like headhunted and recruited out of Rolls-Royce, and they themselves left, got a healthy package up front from their new job, and put it all into Rolls-Royce shares, like huge trade. And if so, like that sort of thing triggers your interest, obviously. But that came after a number of other people had talked to me about Rolls-Royce on various fronts, like a number of other people, some of which are in Rocky's community, talked about Rolls-Royce, like, what do you think of this, you know? And like being in the UK and having friends who do this in real life in the UK, it's like you get more of a conversation with people when you talk about like Babcock, Rolls-Royce, and debate those two plays that are potentially on at the minute. You get little like more conversations. So like things like that, just natural little things. And then other things that happen are really huge profit signaling mechanisms, like when your nieces are up and they're playing with these particular type of toys and you've never seen them in your life before, and you look into it and you're like, well, that comes from this and it's that and it's this and it's part of this huge franchise and that belongs to this people and that, and they're interested in apparently what are their friends interested in that, and they're like, they show you their TikTok reels and all their saved TikToks and that, and you look at it and like, if you're like me, all you're looking really at, like, you might be funny or you're laughing because like your nieces are cool and they're enjoying stuff, all you're really thinking is like, where's the money here, like where's this money, like where's this money coming from, what's the story of this, like how does it work, where is the money going all the time, where is money going? You walk through a supermarket, God heaven forbid, I hate having to do it, right? I hate supermarkets, I hate people try to direct what direction, which angle I'll walk in, never mind putting stuff into the air to make me feel a particular way when I'm in the building. I hate it, right? I hate it. But I walk through a supermarket or a shopping centre or a mall or whatever you call them where you are, right? And usually the shops with absolutely nobody in them are shit, and shops that have got queues out the door, they're probably a good bet. And if those shops look new to you or for some reason you find it unusual, or there's like a huge demographic really attracted to any one particular place, or you can see that there's a subculture forming around a brand like GME and the relationship it has with its customers, right? This is forming a whole new subculture. And when you see things like that, that's a huge profit signal mechanism. It's so obvious, right? So obvious. And then through experience of doing charting, you see things like all the time, and you're like, oh, well, look, this looks like that. Is that the same thing? And after a number of years of taking the risk and seeing whether you're right or wrong and using a strategy and tweaking that strategy, then you're like, well, I can see that this is happening. I can see that's happening. What everybody else doing? And I don't get as much time to do this sort of thing as I might previously have done. But like, when you're talking to everybody in this industry, or talking about your life, or talking to the neighbours about their jobs, or you meet someone who's like installing the broadband in around town, or people like, there's a chap here around this area works on mobile phones. Like people who work for different companies all have information that they're talking about, usually all the time, and that's what I think about constantly. And when somebody talks about what they're doing, to me anywhere, even if it's not like a conversation about trading, obviously most of my conversations aren't, that's what I'm thinking about. So like, it's just a whole natural sort of osmosis of being in the world and that, and seeing what direction the world seems to be going and that. And I suppose you could extend that really far out and say things like, well, like on a very general level, like it's obvious that the world's changing with regards to environmentally sustainable practices, and there's huge industries there, and who's likely to take over those markets. So there's like, when you're looking at the commodity markets, right? If you're a commodities trader, it's kind of different, right? You might specialize and in one particular thing, which is like oil, for example, and you might then really, really understand the different dynamics and the different like the reflexivity of that asset with regards to, and its correlations with regards to the overall market or any other particular asset or companies within that. You'd be looking at how to isolate risk with hedging one against the other, and how you'd make the most of the moves, and like the best instruments to trade and whatnot. Sometimes there's just so much to learn about it, like say for example a commodity market, that you could spend years and years there and learning about one singular thing and how to trade it. And like, that's another way people do things. So like, there's a whole huge world out there of things to trade, of huge different selection of instruments you can use to make money on the markets, and loads of different ways of exploiting them, whether that be looking just scattergun, like I don't care what I'm trading, has it got a trend, let's go, or here's this asset which I like, I understand, I focus on my maybe exclusively my whole career, and I trade it when these things happen on it, and that could be like even more things. So like, if you've just got one thing, like, and it's a 30-minute MACD trading strategy, and you're going to do it on anything you want, then like, sure, go through all the charts, look at everything, but like, get a picture of what the overall context of what you're trading is, because every strategy will fail eventually, and every system is made to be broken. So you're going to always have to be working and working and working, and it will never be a time, I'll tell you now, right, nearly 2 decades into this, there'll never be a time when you're like, oh yeah, excellent, this is how I find things, this is how I trade them, this is my edge, and this is its effect on my account, on my portfolio. Like, that won't happen. There'll never be that crystallized moment. There'll always be a journey, always, in your own psychology as well. What am I talking about? I think I answered a question there. I finally convinced my brother to join the line. Pushed his ass to Rocky's channel for now. Awesome, good work. You'll learn a lot there. Thank you so much for everything. You and your brother. Wish you well, Rocky. Andreas, well, nice to hear you getting on with your brother, and I hope you two use like bond over all this stuff and kick the hedges ass together. It's great to meet brothers who are also friends with each other and like positive about each other. And great, thanks so much for welcoming somebody else to the party. And hello, Andreas, brother, if you ever make it over this side. And thanks to you, mate. And that's a really generous donation. Thank you very much, too. And then there's underneath, Old Capital Comics. Oh, buddy. Most comically ridiculous reason for Moash Trigger. The most comically ridiculous reason. What would it be? Like, personally, I think it would be like highly ironic if Ken Griffin's ex-wife came out and like said, "Oh, look at this text message," or "Oh, look at this, look at this. You know, this time we were here and he said this," or you know, something like that. That would be hilarious. You know, that would be hilarious. But that would maybe be like dark, or looking for something ironic, comically, as in like Charlie Chaplin-esque. Would be a fat-fingered mistake from somebody at Citadel accidentally covering some of that position. That would be so funny in retrospect. Like, just even imagining that person's day if they were typing in like, you know, sell this XYZ was and it accidentally hit buy. Now it happens, right? You do have to go through a number of wrong clicks to get there, but it's possible. You know, I've seen it happen recently with people like accidentally clearing debts and so on that they didn't mean to. Hilarious mistakes, right? They cost hundreds of millions of dollars. You see them reasonable, wrong word, but you see them like frequently, much more commonly than you might expect. And like a fat-fingered buy when volume is so low of like 500,000 shares. Like, especially if that fund manager is somehow attached to like a mutual fund and they can't immediately divest or something like that, and it's like, you know, that sort of thing would be hilarious. That'd be dead funny. Like, you're not likely to see that though. If in terms of like MSM stuff, like the mainstream media pushing it, I don't know what that might be. If you're in Spain, you've ever seen a show called Aquí hay tomate, I'd love to see something like that causing it. That'd be a good trigger. But I don't know. What do you think? That's a good question. What would be a comical reason for it, rather than any such specific fundamental or technical reason? It would be, I don't know, a meme. I definitely want to see what it is. If it is that in the end, it'll be fun. It'll come back, make for a good story. So that is that. And what did I get back? Can I look at CLF again? Yes, let me look at CLF in 2 seconds. And then Aaron before that was talking about how shorts are potentially experience infinite losses. Space Monkey. I love GME and Tradespotting. Well, I love what you do, and I love the way you treat me, and I love the interactions in chat, and I love the contributions you make all around, Space Monkey. I love you. Daniel Groves has become a member. Awesome. Yeah, talked about that earlier. No, we didn't. That was just recently. Thanks so much, Daniel. Amazing. Yes. Rob Davis became a member. All right. Sweet. And Aaron became a member an hour ago. And amazing. Thanks so much. Amazing. Thank you so much. I didn't notice that at the time. That's freaking amazing. Daniel Gross put 5 tracks beforehand. I was talking about the volume. Awesome. What else have I missed then? Have I missed other things? Chris, that was Chris. Yes, that was before we started. Became a member too. So thanks, Chris, if you're here or seeing this later. That's really generous. Thanks so much. Andy, well, wait, what? Okay, I may be doing it wrong. I trade like I poop. Just grin and bear it no matter until it's over. You will feel better in the end. Finally. That's right, isn't it? I eat crayons. Andy, toilet health is very important. You should never ever stress or push. Just relax and wait, right? Everybody's got time to poo properly, and if you haven't, you're going to need to make adjustments to your overall lifestyle. That is my advice. And that's not financial advice, nor is it like any advice whatsoever that should be taken seriously. But like, you know, just take it easy. That's especially when you're on the toilet, right? That's your alone time. Sometimes that's the only break you get. And Darian has just subscribed. Thanks, Darian. Cool. Sensory Hoax. I can only huddle. Where's the huddle button? Can Jamie see the live orders? Well, this is NYSE, and this is the official exchange for it. This is where it's listed, and this is where ostensibly it's traded. So yeah, I can see these orders live, and this is a 1 minute chart. This is like everything that's on the books that makes it, and everything that's reported from the dark pools that's reported makes it here, and it's as live as it will get in that sense, unless you're sitting in a dark pool right now, or working at a bank with oversight of the routing of whatever particular orders, or in a market maker position, looking at the things come in before they even hit the books and routed through to you. This is as good as it gets, right? This is it. This is the direct list. This is it. Up to the minute. Live pricing. Yes, this is it. You see it too. And ticker in the top right. Got it there. 179 spot 28. Sorry, here. This is Des live prices. Yo. Did it? What it is? Yo, what time is it here? What have we got? It's coming up for 1984. That would make it 8 o'clock. So that was 2 hours. That's awesome. So we got there. We did 2 hours. Shall we? What shall we on? Has anyone got? I'm seriously going to build a castle and turn it into a vacation spot. That sounds nice. I love that idea. I love that idea. When I was really, really young, I wanted to be really rich, and that was my goal. Was to have like a big castle somewhere in Scotland, and it would have a lake, and I could sail a boat up and down the lake and eat sandwiches and look at the castle. But it didn't have to be that big, just a castle, the shape of one even. And the lake didn't even have to be mine. I just thought that would be nice. But even back then, I was like, I'd much rather like have a meaningful destiny than a comfortable life. But yeah, I like the castle. The crazy prevail. No history books are written about sane, normal people. Yeah. Am I crazy? I'm late. Has Jamie told the ticker what to do before close yet? No, not yet. I haven't quite told it what to do yet. I haven't quite. I'm liking what it's doing at the minute, that's for sure. It's a positive reaction from its recent touches down at the lows 170s or the mid 170s. This is a positive situation we're seeing here in the 1 minute chart. I like it a lot. So we'll see how that continues. I can also see that it's quite natural on the 1 minute chart for it to take a break at this level on the RSI, but then I can also see that it's tested it 3 times, and it's considerably tested it here and came back with much more sustained attack than here, and again here. So here it went once, here it went twice, and this is it once, twice, doing it a third time on the third touch. 3 sisters married to 3 brothers. Here's the level into the oversold zone. You break that, that's positive. You haven't done that on the 1 minute time frame since you were putting in a high in around 180s and whatnot. So do we see that again? Touch the top of the oversold zone? Yeah. Where does that take prices? 180 really at the minute. Doesn't break it beyond there. You need to see something on a longer time frame then. But where's the top of this move? Well, you've already gone above the 200. You come down and test that again at the high 178, 177 again. This would be totally possible. And then you'd be looking up $180. Test that sort of level. 180 bucks or plus something. And that'd be good. And then continuation, let's see, like it's protection by the end of the day. I'd like to see it 184.48. That's where I'd like to see price action. Am I going to tell it to do that? No, because I want to see how it reacts to. We're on the 1 minute chart. Oh my god, I've finally done that. That worked out well, didn't it, chat? As did this to here. Let's see, 50%. 236 recovered. It's hard to argue with that, It's hard to argue. That's a 236. It's got that signature on RSI. It's definitely tried to go down. Didn't work. 184. That's asking for not much. 184 spot whatever I just said. Or then 186. Do I expect it to be more than that? Not really. It's Tuesday. That's what I'm looking at, right? That's what I'm looking at. Opening closing above this 188 level, right? Yes, that'll be fabulous. That'll be fabulous. Right, really, really fabulous. Talking low 200s, fabulous on the card straight afterwards. Yo. Tradespotting. I'm on the 1 minute chart. Lol. Luke Spears. That's where he makes all his money. Hey, snap. Look, snap. Jenks. Now you can't speak till I say your name. Luke Spears. Oh, I did it. Right. So yeah. Look at that on the wall. It's beautiful, isn't it? It's beautiful. There's your 236. Doesn't matter what time frame you're on, that's still the 236. We're above that. It's 178 spot something. And I'd like to see it test 180 in the near future. This retest at this level when all these start crossing is totally possible, but it might just come down to the 21 and it itself's at 170. It's at 179 already and it's lagging, so this is it, this is good. Let's see how it goes. Oh yeah. they don't have the bullishness like on this to like say, hey, I can tell you this is exactly what's happening. Based on what I've seen of it so far, like I would make that confident prediction. Also, because there's so much yet to happen between now and the end of the day. No, it's not that much, right? It's not that much, but there is in terms of tests and the strength of this, and whether or not, like, because there is other areas that could come in it. And then it could then constitute a lower high, and and obviously over here, right, you've got higher than over here. This is then not an uptrend yet, it's a downtrend, so you want to see this break this high with positive sign on RSI, like higher on RSI as well, so in higher on the price action, and then come in for a test and maybe of the 200, and at that point it'd be like ding 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 bing bong entries. I was just wondering what Jamie thought when a stock becomes less liquid and candles don't touch. You mean in terms of gaps? I don't pay much attention to them unless they're on at least a 4-hour time frame, preferably they're on the daily. There's certain assets where every single gap will get filled. There's others where every single gap will get filled, but it'll take a while. And then there's others where every single gap will get filled. I don't care what happens in the meantime. Eventually, every single gap will get filled, and that's all of the possible types of gaps in the world, and they all fall under that category: gaps that will eventually get filled. There are maybe the odd exception that proves the rule. Maybe that one of them is Bitcoin in around $9,000, right? Maybe it is. And there are on huge assets. There are the odd gap back in history where you'd be like, how's that ever going to happen? But it just finds a way. It just does. So low liquidity causes gaps. If you're talking about like the liquidity being so low that it causes like real barcoding because there's still like a frequency despite low liquidity, then I just dismiss that mostly. Go to a higher time frame and ignore it. Whatever that might take, and when I say like weekly, monthly, or whatever. If it's still doing it up there, then I'll just stay away from it. With regards to gaps, though, yeah, there's nearly often cough Bitcoin. You want to look at it? Oh yeah, Bitcoin did well, right? This is what I said. I was talking to Rocky about this, and a couple of other people, and they're like, "You were wrong." It's like I wasn't wrong, right? What I said was it got to 34 and it'd do a test, and that I wouldn't go short on it until it got up there and looked at it to see if it was divergent. And not only did it not get there, on Saturday and Friday it was having an RSI breakout and going up, which was this. And then this here is the breakout again, right? Like strength breakout. I talked about it going to 34, and then we'll see what happened, and then it really did go up there. So like I said, that's that. And what do I think about it now? Well, I think what I said is still true, that it might get up here. That was potentially it get to 34. It could go all the way up there, but until it put a new high, that meant something. It didn't mean anything. There is bullish divergence there, obviously. But then there was a touch of bearishness. And like the nature of this is very pumpy. Yeah, but it broke that roundy top area on the 4-hour with a gap, right? That was it. I mean, there was this definitive price action here, 32.5. That was it. And then the gap 34.3. Is that one of those gaps? No, it isn't. It isn't like. I mean, people are going to lose a lot of money with crazy narratives like this because like if you want Bitcoin to do well, then you want it to test this gap and fill it. You want it to come down and do that. And maybe that's why you're coughing, because you're like cough Bitcoin and talk about this gap. 4-hour, and I said 4-hour gaps mean something. It does. It looks like it to me. Like people will be excited there, because it seems very similar to this, right? Here's your downtrend. This opened up above the 200. Here is even better, but here it opened up above the 100 exponential. It did it and also broke its previous potential zone. Right? There's a high here, there's a high here, there's a high here, and there's lows on all of this. So and it opened above that and went on again. And this one's done the same thing, like opened above it and opened above the 200 and gone on again. And that's not as strong though as this. Accumulating here and going up, that's stronger. It's also higher, but it's not an uptrend, so it's hard to say like, yo, you've got some bullish divergence, this is going to keep going. If anything, it's like, actually, let's suggest like a retrace in the 236 on this. What would it be now then? If that's, let's do this. Do it. Low is actually back here, right? This is actually low. And then the high here is where, let's drop it right on it. Right up. Now it's come back, it's touched 236. It went below it, came above it again, failed to put in a new high. Didn't get anywhere on RSI, it's below the EMA, I imagine. It's also testing the edge of that zone. I expect that this will either bounce again now, soon, which I can check in a second, or actually I think it'll probably come down, come into the golden pocket, fill that gap. Look at that, it's so obvious, eh? Like, that it'll come down and test the top of that gap at 34,450. That looks really obvious to me. It's a question of, do these levels catch it beforehand? Like the 236, maybe, but like, maybe, because it's above this zone, and for some reason people think, well, I'm never going to get cheaper than that again. Maybe. 382 retrace on that is also like in around test of 21. That'd be like really bullish if it got that. If it didn't get the 336 and got that, it'd be very bullish. To also start putting in some sort of we talk about it, but the big formations it could be putting in there. And like, but like further down there, you've got a retest of this zone, which seems much more likely to meet. And then the 0.5, that's like router, you retest that, and that's the top of that gap. And when you get there, what do you reckon people are going to do? Do you reckon they're going to have all their trades there? Well, maybe if you're like want to collect everything, and you're the guy that caused this breakout, you'll also have orders here. But it's likely that that wasn't what happened here. This is the CMEs, right? So I'm talking about something with gaps, because this is like institutional arena here, or at least very large accounts anyway, let's put it like that. So them, and the bottom of that gap's in at the golden pocket, right? It's like TA works really good on Bitcoin. That looks like an entry, and this was a no trade zone. It was an area to potentially go short, but only if there's divergence and everything worked out, and it didn't. Like, that blew that out of the water. That was very positive. That was breakout there on RSI Friday, Saturday. Very clear signal not to go short. Yet, tiny touch of divergence between these highs, cool off period, 236 retest, bullish. Let's see. Has it got it? Let's see. I'd like to see. I'm like, my opinion isn't worth shit, but my opinion is it would be good if it came down and filled that gap. That would be better for it if you're bullish on this than just leaving it and seeing it like try to do something. Because the truth is, right, it's not done nothing. It's not done nothing, this, until 42, right? And it's not even 42, it's higher, right? It's higher than 42, but it's 42 needs to do something, or it's rolling over still. Like, look, lower highs, lower lows. This is a downtrend. I know that, like, you can do these things like that, and you say, but look, here's this, and like here's that, and perhaps it's like a fake out of a wedge, and that would be the measuring move off it. Perhaps you're right, but it's also true to say, like, maybe it's more like that with these wicks touching it, and then is it similar to GME where come in, having hit the top of the channel, didn't break it and come back inside it again, stayed within this idea of this channel. It's a 2-day time frame, right? This is as real a channel as you'll need. Touched it again, there's multiple tops on the top. The breakout from the top that came back, retested the very bottom of it again, went out top, breakout at the top, open and close outside of it on a 2-day time frame is great. You're above the 100 period moving average, caught by the 55. There's a negative splay on them and a negative slope. Sorry, a positive splay, but a negative slope, and it's coming in to be negative for a couple of them, as you'd expect after that rolling over up there. This is a good move, but it's not enough to break these highs, and so we're to see more, right? And the test that it did is like, this is one breaking here, but staying above these levels, otherwise it's going to come back at the very least, test the breakout of this channel, testing the breakout of this channel, testing this downward supply line previously, putting it in as support, being at the 618 and the 65 golden pocket. I mean, it's like has failed to put in a higher high. Like that's what GME's just done, right? It's come in and done that, and it's sitting in around that level, and then because it's totally natural. So if you go in there and you draw that in there and you draw it down, say it comes into that 618. It's a say. And 236 looks like the 0.5 over here afterwards, like that's all how things oscillate, right? They go through these sort of things, even on 2-day time frames, and nothing definitive's happened yet. 42, and even then, right, that's nothing yet, but a lower macro high. It's really like want to be seeing it above 56, 58, and then you want to be looking at that to see if there's huge divergence. And the truth of Bitcoin is on its two shatteringly crushing drops that have really hurt people's psychology from what I've seen of market participants is here in like 2017, 2018 stuff. Not here necessarily. Like there's the two previous highs on Bitcoin that are really. It's not going to get it on that chart either. Go here. No, well, not. That's not going to get it. Like these ones. 2017 here, like that was really horrible, and then this one here in 2019, like that was again really horrible for people. Like these two crushingly bad moves, they had to like retraces after a drop, which came up, and that retrace was not satisfying, and really hurt people again. And then this one, same deal, really hurt people again. Look at the hugely divergent, like this one. Second move up, so close on price, so far away on RSI. This one lower on RSI, higher on price. That was shan on poor people. This one here, good, small retrace, went on again. People got excited, terribly divergent, so bad. And so yeah, that's what you're thinking. That's what I'm thinking with it. So what is it that mean? That means like this is the retrace to see what happens. This is it coming back. This is it. This is the. Is it just doing what it always does? Is it when it gets here where the people who entered here are desolate and like inconsolable when it drops again, which is what's happened twice, and it's doing very similar to that now. Or does it come in here and pump right through and put in this as a low, and like everyone says like, wow, yay, we're on for the 250, we're on for the 500, we're at 1.75, we're laughing our face off, millionaires in Bitcoin. Well, if it's going to do that, you definitely want it filling that gap now, right? Yeah, so that's that, 38.40. So what do I think about Bitcoin? Well, if it does certain things, then yeah, it could go along on it. Otherwise, if it doesn't do certain things and it goes and tests them and fails, which is like could possibly be doing at the minute, then it is still a very good short. And that, and truth is, I've got some money in this which I'd like to protect. So like keep an eye on it and protect it with like a cover of some description should it drop. Because I'm not interested in holding, like, taking a loss on this down to like 22,000. I'm totally not interested in taking it anywhere near 27, 26. I'm not holding that loss. Like, no thanks. No way. I don't have to. I'm not doing it. It doesn't benefit anyone. I'm not interested in it, right? So I'm paying attention to that from that perspective. And this is not inspiring. That's better. But this is downtrend. That's not great, caught below those two. That's your only sign of hope, and this is a downtrend, so this again muted. And then on 4 hour, it's like, ooh, same thing, but even more dramatic. 15 minutes, maybe there's a recovery again, and then it puts up again here. Swish, swish, swish. That 200 test is okay so far. It's worked for a while. Some better than others, so that's it. We're getting this massive drives down to sub 30k every month, it seems. Junkety junk. Dunkly lunk. Well, monthly test in here. This is the thing, 27, right? It's like commonly tested it already. This was a potential move, right? Take profit again, ultimate target, potential downward move. That's what I was worried about up here on the monthly time frame. Sure, you'll get tests of 30,000, but that's fine. Like, I wasn't buying much Bitcoin above the 31,000 really. Personally, I wasn't. But up here, no, not so much. And that's what I was worried about, right? That test there, recovery from that, nothing. This is bullish engulfing on the monthly. So what? We haven't even recovered or open closed above the close on this bottom move. Like, that's really crap. Nothing like as significant as the huge divergence and the doji and the bearish engulfing candle you got all on the monthly on this thing. Like, that's brutal. Nah. Like, what's that? It's like, this also looks artificial. Right, sure, covered us. I like that. Like, on the weekly, it's significant that it can't get below 50 period and 55 period exponential, 50 period simple. I like that, right? I do like that. And sure, right. It's just got so many reasons to go a little bit lower. So I like that. I'm happy, that this has gone up a bit. I also am like not happy because it hasn't done anything yet, and it's now again in no trade zone. That's my perspective. Humans are humans and always will be. That's what they bank on. Shit. Humans being humans. Humans need to level up though, and then they can't bank on nothing. Mind you, the people who run banks tend to bank on nothing. So we'll see how that prediction plays out. Right, yeah, what am I doing? Looking at Bitcoin again. Well, we've covered that. That's a little bit of Bitcoin. I'm going to have a cup of tea. I really need a cup of tea. What time is it? 8:15. So it's power hour, right? And then we can do some AMC and close on the GMEs. That's why FUD works so well and why they use it. Yeah, they do. They also use the fact that you have a life and obligations and responsibilities, and they know that over time that you yourself will become less and less interested in one particular narrative because so many of these natural concerns in life pop up, and so they just need to just extend things. That's like the best kind of fun. I laugh about this idea, right? I laugh about it and think it's hilarious, the concept of sideways capitulation, right? I think it's funny. I do, right? And I do kind of like take the mickey a little bit out of people who say it in a nice and well-meaning way, right? And I expect that those people have plenty of opportunity to take the mickey out of me. But it's true to say that people want to bore you out of a trade, and there is the potential for something to be described as sideways capitulation, like, oh, this has gone on too long, I just don't care anymore. But I think equally that would be true if there's a certain degree of that. If it's the opposite, it's also true. Like, well, this has gone on so long, there's no way I'm changing my mind now. Like, we learn to accommodate, and we can live with this with sacrifice. So, it's not a great candle in 15 minutes, is it? Like, mind you, I'd expect a bounce and a retrace, and perhaps this will be a wick here again. Or if it breaks below this level, no. But here, right immediately, yeah. So go down right to it. Oh, is it going down? Shoot it. Pew. And then when it gets there, shoot it back up. Pew. What was I just talking about? Psh, who knows? I'm gonna have a cup of tea. Gonna have a cup of tea. Will everybody still love me? Will you still need me when I've got a cup of tea? I feel like Cohen will do something about it. Do something. Mr. Cohen or Ryan Cohen. What will we call him? Senor Cohen. Look at that. We shot it. Pew pew. And it did both of those things. Touched that and it's closing back up there. Shall we shoot it again? Pew. Let's see what happens. We just shot it again, so we'll see what that does. what will he do? What will he do? Well, he's doing something all the time, innit? He's working. He's at work, and that he's at work. Obviously, you can sit there and you can be like, "Yo, like, this is a really important part of the chart for technicals. Ryan, Mr. Cohen, please come out with some news catalyst or whatever." And you can do that, and you can rely on those things. Or instead, you can say, "Well, what do I think? You know, what am I going to do to change the world? I'm the one that changes my life," and just in that sense, it's less about what Ryan Cohen and GameStop can do for you, and more about like what you can do for GameStop and that. And I don't mean that in a patronising way. Really, really don't. And I know everybody's heard that expression many times before, especially American friends. Obviously, part of your upbringing is that idea. Ask not what your country can do for you, but what you can do for your country. It's still the same science, right? It's like that comes from an essence that comes from like the idea of you're in charge of your life, eh? Like get off your ass and stop asking other people to do stuff for you. Like why the fuck would they? Like, hey, you know, how old are you? Why would anyone do anything for you? Like why? You know, why would they? Right? And so they'd probably if they were right, if those people do exist, and I can tell you I consider myself to be somebody who would do something for you, like what would they be doing? It would be doing it for people who are all interested in helping themselves. Like there's no point in me putting effort into you if you're not interested in helping yourself. I could put it into somebody else who's currently doing more to help themselves than they even need to, and with my input maybe that would help them even more, and they definitely make the most of it, you know. And I want to change the world, so that doesn't mean changing like the number of trees in it. It's more about the changing other people's ability to affect the world, because I can't do that on my own. That'd be a stupid idea, right? I have to help empower other people so that they can do it, and not compromise on my message, so that those who hear me are those who are similar to me, and so those effects I have will be those I'd like to have. And so it's not about what Ryan Cohen can do for you, or what I could, or what anybody else can, or certainly not what Bitcoin's going to do. Like, it's about what Picnic can do for you. Jokes. It's about what you can do for yourself. JRMA 179, you want to be getting above that 200, that was good, but no open and close above it. Now we're back below it. Is it an open close below it? Is this the higher low? Is then here, good one. Is this, higher high? Is it broken anything there? Yeah. Let's say that counts. Positive. Yes, we'll see how this goes. Like the 9, now we changed that to 21 and 200, and then we're on 50 minute, but like, yeah, cool, go on then, mate. Try it. This is lower than back here, but this is tiny bit higher than here, but bearishly divergent. And then here, RSI won't get as low if price action does, and that'll be bullishly divergent again. This is now a period of flux, so that's the way it goes. I could do something to Ryan, I suppose. You could. Yeah, so that sounded like a patronising question, patronising answer, and it was probably of little value to your. Not, you weren't even asking a question. You're just saying like if Ryan did something. The truth is, he's probably working all the time. Like it's like very very hard, and I'm sure he enjoys his job, and it seems like it to me. So why wouldn't he be doing it? You know, it's something he enjoys doing. Seems like his whole life is. He's a very motivated individual. Like he's not just here since in the soap opera for him. I mean, he's living a serious life, and he's doing it seems to be in a very effective way. So I imagine he's not just wasting his time, and like he'll know how to do his job better than any of us. So, if while it might seem like I'm patronising you, the truth is, it's just like that's just a natural response to wanting other people to do things for you. You know, it just feels like you know. For what, and it's not even necessarily what you can do for other people, which is a really good question. It's more like what can you do for yourself, and that, like learning is one of the things you can do. This is all nonsense, right? Bing bong, the price is wrong. This is all fucking nonsense. But the thing that's true about it is all the lessons that it can teach you, and you can use them all the time, right? And it can change your life. And I'm not joking about that. And it's not an exaggeration, and not being flippant. How would you recommend crawling with trading, paper trades? Oh, starting slowly, you mean? Paper trade's fine. Like, paper trades are good for teaching you how much money you can lose, the velocity with which you can lose money, right? So you can paper trade spot, and then paper trade options, and then you'll get an understanding of how freaking dangerous options are, right? That's a good lesson for anyone to try with paper trading. When it comes to learning your lessons about greed, fear, and essentially those two things that boil down to envy, when it comes to learning about those things and learning about your personality, well, unfortunately, as I think you asked me earlier, it's the same as you said there. Humans are humans, and we tend to only learn when we've been burned. If only we were capable of learning from others' mistakes. Most of us aren't. Most of us will go through all the trials and tribulations. And so learn this stuff. Learn this stuff and then save yourself the pain. My average is 10 at AMC. That's a good entry average. The dead money Ulsters, it's difficult, no doubt, but 100% doable. Just have to get past a few hurdles and learn. But once you're there, everything changes. 10 money Ulsters, where are you? You're an absolute legend. Yeah, this is the second of those jobs I'm prepping to get into, and I'm a glutton for punishment. Also, I love the puzzles of predicting reactions. Hey, you're very like myself. I love it too. And yeah, apply that on a macro scale, sounds like what Ryan Cohen's probably doing. Not that I'm one to judge or know what he's thinking. It'd be silly. Paper trades don't teach fear and greed. No, they don't. They don't teach you that. They don't teach you much about yourself either. Good point. He makes a very, very good point. I'd put all my weight behind what Zig just said. Options are stupid at AMC. Buy shares, that's all. It's certainly a good decision. It looks like Gertnet from Reddit did a data breakdown. Data breakdown. Wonder what those are. I can break it down like this. I can break it down like this. I can break it down like this. This. I've still not got that cup of tea. It's all about making the mistakes as in a controlled manner as possible. Yep, you can make the mistakes and then you can learn. You're not going to do anything on paper. Like, you see, this is the thing that happens with paper trading, and you do it and you're like, well, I made some money, great, excellent. I wish I'd done that in real life. What was I doing? Straight on to make real money. Boom. It's like, if you're going to paper trade, you can get the most out of it by treating it seriously, using the budget you've actually got in real life. Then you'll see how quickly you'll lose that budget, or you'll be how realistic it is to achieve your hopes and dreams with that budget. And if it's what you've got to start, then put it in your paper trading account. Don't pretend that you've got millions when you don't, right? Then use a trading journal. Like, these trades that you're taking on the paper, you're trying to fanny about. Like, if you're just trying to fanny about, and you're never going to be a trader, cool. If you're actually going to be treating these paper trades for some reason, like you're doing them to put your time there because your time's worth money and you're trying to learn it, and this is a cost to you already, and you understand that, then you're going to want to maximize that benefit you're getting by taking the time to write down in a trading journal how you feel and the reasons for entering trades, what your profit targets are, and what your stop limit area is, and why. Then take the paper trade, stick to your plan that you've written down, right, rather than some fluid thing in your head. Stick to the plan, watch it happen, and then record in your trading journal what happened and how you felt afterwards, right? And if what you didn't expect to happen happened, which is very common, then you can maybe see some reason why that might have been, or at least you'll have noticed something perhaps on the charts that came up that at the time you might say, oh damn, that happened. Well, that's information, right? And you write that down, and then you've written that down 400-500 times that what you expected to happen didn't because X, Y, and Z happened. Well, you're going to remember that for the rest of your life, and you can get that lesson from paper trading, which is fantastic. GME did it. Good one. Nice one, mate. Pump. And so, yes, so paper trading, good, but Tradespotting, could you break down treasure hunt a bit? Could you break it down like this? I can break down the very start of it, but I have now, at this moment in head, can't reel off all the clues. There is a thread on r/Tradespotting, and it's tagged was Flare trade treasure hunt. So if you go at reddit.com/r/tradespotting, and then you see on the side panel on the right there's like Flare menu, and you click treasure hunt, you'll get a list of treasure hunt posts that people have put in their investigations, which is me telling you where like loads of people have done work that you can see on the treasure hunt there and follow along with, and many of them have recorded the clues or gone through them chronologically and investigated many aspects of them, which will be a great help to you. And I suggest if you're new to the treasure hunt, you might want to think about joining one of the big teams that are tracing it at the minute. You might want to try to do it yourself and get all the money for yourself, whatever. You might be in one of these teams and might be negotiating how things are going to work. And do you have anything on scanning strategies? With like scanners and looking through charts. I tend to not use scanners. I don't particularly like them. Like I hate the it's mostly from my own scanning through things, and over the years, like this is a watch list that I've got mostly from doing this channel of like, here's all the different you can't see it right, but to the right of my, how do I do this? Does this make it easier for you to see? No. Does this make it easier for you to see? Yeah. Like this watch list here, right, which you get on TradingView by clicking the little button of a clipboard in top right. These is like stonks that have been of interest recently, and you get added to your chart, and you can see like they've all got percentage changes and whatnot here. A lot of this is pulled through of like spreadsheets I'd use and I've looked at over the years. There's got even more data on it, well, obviously more data, but loads more tickers, and then they've got like the various Bitcoin exchanges and the areas it's traded popularly. And then below I've got like the alts that have made like the most interesting moves that I consider to be like serious to some degree. And when I say that, I mean that like they achieve a business purpose that I would have identified as being significant and having a large addressable target market. And then down here I've got other ones that are like less of that, but also not less of that, but are potentially with similar, right? Similar, like some of these are wrong and the purple ones need fixed, but similar, like this is just the go-to area on the chart really, but they're all like, they're all again alts. And then these are the ones that I've been looking at recently. Like I took that just so that people could see it going between gold and silver and stuff, because people have been interested in it a few weeks ago. But like you can see GME and AMC like stand out, so they're easy to click, and then they've got currency stuff, pairs, more of them elsewhere. And then like the stuff that I've looked at that I've been asked but haven't really managed to fit it into something. Oh, I didn't do CLF yet, and somebody asked for it. And what time is it? Holy jibbers, it's 8:30, right? I'll look at CLF in a second. So that's like and so like I'll add it all on there, and maybe less commonly recently, like maybe once a week or every couple of weeks, I'll be looking through this and I'll be like, oh yeah, I haven't added that to on spreadsheets. I'll do. And then sometimes I'm like, it wouldn't be cryptocurrency. It's like the cryptocurrencies have got a different way of looking at cryptocurrencies, and to an entirely different spreadsheet for that, which is like nothing like the one I'd use for fundamentals on stonks. Nothing like it. Like way shitter, really. No, I say shitter. It's way less data in it. Not way less data. Well, there's like nowhere near as many data points. That's true, right? There isn't. So like whatever. Anyway, yeah, I try to stay up on date of it, but that's what I say. Like I don't share it because it's a mess. It's like a mess. It's a mess. Until I clean it up, I can't share it because people will be like, "Why is that such a mess?" And it's like the value of it there would not be obvious. Anyway, not that it wouldn't be obvious, it'd be like people would think it was awful. Right, 236, recovered that, good, hold above that, positive, on good, GME, yep, but am I looking for this? Yeah, 186 by the end of the day. You're asking for a lot now because there's only 27 minutes left. Is there enough time for me to have that cup of tea? Is there? That's not a meaningful thing. These moving averages here, other than being below the 50, but it's the hourly time frame. Like hourly on Bitcoin, hourly time frame. I'm not a huge fan. That was a bullish engulfing. This was a big doji. This was that retrace. This is below the 236. This is not an open and close below 236. This 4 hour Open and close, like anything above 17892 at the end of today's positive. Stonk Motion, nice name. Welcome to Chimp. Thanks so much, buddy. Thanks very much, Stonk Motion. Everybody else who's joined us, remember today, it's been well good for that. Tradespotting, I've been using scanners to find lists of oversold, overbought, new highs, new lows, etc. All right, cool. Yeah, so you're talking about like that. And then there are ways of doing that. It's a really good way of doing it. You know, plugging your the indicators you rely on and setting up like alerts. You know, show me lists of things that have achieved this today. Say that have gone over a certain percentage price move, for example. That's like a simple one. Or like Zig said there, what was it? Oversold, overbought, new highs and lows. Yeah, brilliant, right? New highs and lows. That big fan of that. Big fan of that. And then like you say, and there is a huge advantage to doing that if you've got a really good if you're really focused on one particular edge, or you can narrow it down to a particular industry, then yeah, man, definitely, that's awesome. Anyway, what else is happening? Luke Spears then balance the capital risk around it to an acceptable level and off to the races. Good book, crazy expensive but very good. Van Tharp's Guide to the Money Management and Position Sizing. I think it's still called that. Money Management and Position Sizing. Yeah, it's good. I bet you it's a very similar thing to what I talk about in my video. I don't know this book right off the top of my head, don't know. But maybe it's very similar to my video about is trading Bitcoin gambling, and how you can actually make more money with a smaller position size over time than you can with large position sizes. And the true concept of what it means to say only play with what you can afford to lose, because that statement is very easy to be overly reductive with the meaning behind it and just say, well, I can afford to chuck away this 20 quid on a packet of whatever, so instead I'll put it on this. That's not really what that means. And so if that book talks about it, then it's probably a very good read. I would suggest you also check out my video. Well, look at me talking about me, but I'm trying to, it's only helpful. Wrestling still say the Doomslayers. Thanks, Minor. Yeah, right, cool. Yes, fuck, I'm supposed to do all these sort of things, haven't I? I've only got 30 minutes. And CLF, where is it on my thing here? Come on, I've drawn on it. There we are. Why are my drawings at? Well, that's good. Oh, right, you don't need this on anymore. That makes it better. Sorry. Yes, and so on, and all. Yeah, could have a bit to go. Is that? I don't want to see it what it does at 24.50, or failing that, what it does at 23.10. So it's holding this 886 and that's great and all. It didn't do a full retrace, didn't quite make it to break its previous, get back above its previous breakdown. I mean, do you call it there, or do you call it here, or do you call it up here? It didn't make it. Didn't make it up here. It only actually made it there. I mean, that was on this one, but you can see it landed right on that one. And then again, like there's this one, which has got those two on it above it. You're asking for it to do a lot more again, right? Like if you're trading this, it's like very much that 80-20 rule, you know. 80% of the of what it's going to do has been done, and you've only had to expend 20% of your effort. And now to get the remaining 20% of the move, you'd have to put in 80% of the effort. What's that noise? Right, so yeah, so that's what I'm saying. It's my radiators are shaking. I know what the noise is because of that stupid thing. God, it's going to be like that all night. That'll be a total nightmare, right? So what do I think here, right? It's got a little bit of work to do above it. If it's going to break these things, that would be significant. Although, would it do that without a retrace? On this move, came down, up, touched the 236. At that point, it had been putting in a series of lower highs on the RSI and a series of lower lows with convergent lower lows on the RSI, and then a big one, and that was ultimately bullish move off the back of it. Obviously bullish, didn't break up a Kozak, I can see, and then just condense this if you could. I can't, but I can go like that. Yes, and you can see like, yeah, lower highs, higher lows, great. This is the area to break for numbers reasons. It's also good retracing down to there and that. Nah, it would end up keep going to like these levels, possibly here, which is right at the bottom of that. Right, so it's touched the 236 and went on. It got to the 618 off there, broke through it. Great. If it does go on and break this area, like the high of that zone, which would be a real test of it, you know, a bigger, like I'm saying, 80-20, right? This test now coming up is 80% of the work is left to do here, and 80% of the gains on a trade from that 236 have already been made. So you're asking people to do something in and out about here. You're asking the bulls to push it here for you when they've already got all the money from here, and some of them are likely to be taking profit at this level, which would be a sensible level to take profit at. You just have to wonder too, if this doesn't go any higher, and this is the context of this is a downtrend, is this in fact on the RSI really bad news that it's so much higher than over here and all of these highs? Is that actually really bad news, or is this turned around in context really good news? And you'll see at a break of this level. Do I expect it to happen on its first go? No, I expect what it'll probably likely do. Test it and come back, and the levels underneath are where all your moving averages are there on the weekly and your 21 period, or down at your 200 period moving average at the 618 and the 6.65 golden pocket from the ultimate drop down. And then obviously you've put in enough of a move, haven't gone beyond the 236 to start drawing other things here, and back up there testing the top of this Fibonacci. If you were to even get like ideal scenarios and break out, you're still only coming in for a retest of your previous highs, and at that point it's likely you would see huge divergence in that, and it would probably come back again. So the trade you're looking for on this is a retest of the golden pocket, or potentially, if it gets worse, something in around 236, but I wouldn't expect that now. It's tested that, it's positive, it's blown through all this, like the 618 or the 0.5 on the weekly. That would be probably the new low at this, unless this turns into, no, that wouldn't, no, that's fine. Let me just check this actually. What time is it? 43, okay. Yeah, I mean, this is now like take profit zone if you're already in this, and looking for a retest of these levels. Why does it do this? Like, who in their right mind's going to have a stop loss like that? Should be some built-in. Now can you stop being so crap? Thanks. Thanks. Right, so your entry on that's there. Your stop loss on it would be, well, probably just below that dip, just for the safety of it. Even then, it's costing you money. It doesn't necessarily need to. If I was trading this, I'd have my stop loss. I'd have my entry there. I wouldn't care if I didn't get it. I'd have my stop loss below here, right? Yep, has to be. And then on that move, you can't take the whole thing and expect to make profit off the back of it. You'd have some, if the prices did drop down to there and you got an entry in at around $8.69, I'd have would have my stop in at around $6.42, and my targets on the top side, the first one of it, I know it's low right after that too, and that for the first stop it would take 33% of my trade off, probably would be at 11.77. I'd then use Williams fractals and I'd follow up with my stop loss, and I'd keep track of it. I wouldn't take profit here. I'd keep track of it. I'd then move my stop loss up to 15 should we break above that significantly. I'm talking like, 1650 would be significantly above 15. Then I'd move my stop loss there. If prices broke above 19 significantly, I'd move my stop loss there, and then I'd sit my stop loss there. I'd leave it at $20, and I'd have a break profit target at 27. And if that all went to plan, then you might leave a little bit on the table, potentially as far as upwards, like these like crazy ass moves, potentially you would leave a tiny little bit on for that. And then you could manage that position as you went through, right? If this thesis proves to be true, you could look at different retests specifically of this level, right? Of the 25, 26 level, should you break above that, might be look permanent really good. It might be. Anyway, that's the weekly drop down for our, it looks good, but again, like I say, it's done the work. Like it's done it. That's not divergent, no. Erg. And the 4 hours is actually a little touch of it. Yeah. And if it comes beyond the 236 on that move, which would be from here to here, then it's going to drop. So this is the level you don't want to see it going below. Oh, it's not even recovered it. Oh, sugar, guys. Guys, it's not done it. It's bad news, guys. Well, let's draw it accurately, because he's going to make predictions and they say these things to me. It has, look, there it is above it now. You see, Jamie? You silly idiot. You should have drawn it properly in the first place. The significant level for this is 21.47. It's currently 22.19. If I move that away, it's not that I need to do. It's this. This is what I need to do. Anyway, so that's that. That's the TA on CLF. Like, I'll go back to it in a second. I just want to get my charts right for everybody so that ticker's visible. GME one, the king. So I'm back on that, and I will finish off that CLF chat. It was down the bottom here. Time is 20:47, 15 minutes left. Now just zoom in there and say why that level is important at 21:47. It's got a number of moving averages here, 4 hour time frame. Useless. Yeah, so if it turns back below that 236, then it'll put in some bearish divergence, at which point it's likely to come in and test some level, and on this, like the immediate ones jumping out at me are down again. That's still the same. The 236 is still just drawn the same fib in again? No. Anyway, if it does break that, we're looking at a test of the 1919 and of 1975, that sort of thing. Sure, it could get caught at the 3-200 period moving average there, so 15 period moves, 15 minutes. That doesn't mean anything. Actually, on the 4 hour, 200 comes in lower there at 19 something again, so 1919, right? Breaks this level at the 236. It breaks 2147, this likely goes to 19, and a tiny bit of change. At that point, I'd want to see and compare these two highs and look at it again, and then there might be a trade on there, but right now there isn't for me. Right now, I mean, if I was watching this all the time and maybe in around here it does do something, it then later gives one, but I can't speak to that yet, and I can't give that advice, or this some financial advice anyway. And then Rolls Royce, mate. We'll do it on Ricey right now. 4 hour recoveries looks okay. This is Ricey. Let's go to just go to RR. Where is it? Does it have drawings on? Obviously, this market's closed. There's your 4 hour drop and recovery. It's recovered this 21 period moving average. What time's left? 10 minutes, last 10 minutes, right? Rolls Royce 98.70.27. I think it's a bargain below 100. People might say this is a descending triangle. I'd say, well, actually, if you put it in context, it's inverted head and shoulders. And these are really good entries on it. Anything in around like this level's like good entry. Anything down to here, it might be where you would like really look for one, a really good one. And beyond that, you'd be like, well, what's happening really? Is this like a slightly longer trade? Would I think it's likely happen? Well, let's look at the 2-day time frame. Stretch it back out there. 3 days, still not enough. Here you're seeing here you're seeing like the history of this thing. Back to like oh look, and around my birthday, 1995, it's had one low. One major low it's had since it launched was at $22. It came down to 38 here, and at $22 that was in 2003. And now they're testing that sort of level on the price in and around there. You're also at that level, like lower there on the RSI. You're lower than you were on the macro low of this thing. So in terms of the RSI, you're given your best buy signal if it subsequently, as it did, work out and go up to overbought and the price action put in a bullish formation. And if it recovers now, you'd be able to look back on that and say that on the RSI, this bullish like higher low here but lower low on price, and this overall move being lower than back here in the context of an uptrend, means that this is both hugely bullish divergence and it's hugely hidden bullish divergence, all on the same move. This could be the best entry you'll ever get on Rolls Royce, right? Literally better than even back here in terms of what's maybe likely to come next, and the amount of the velocity of the initial moves and whatnot. I mean, what was that? It'll be similar to that, and that was 22 to 180.76. You know, people who really believe in this think my targets are stupid, and it's like, well, why are you fucking trading it? Because the shitty ones you're talking about, you can get them on loads of places, eh? So why are you actually trading it for? You're trading it for us like. Anyway, right, also it's traded by old people. This thing moves the way old people trade things, so like, you know, just chill out, take a chill pill, and I would get lots of it and have got quite a bit of it for that. So it screams to me that this is a huge buy. And this is what I've been saying before, right? If I wasn't talking about GME, if GME didn't exist, and for some reason I was like saying like, well, what is the deep effing value play that Tradespotting wants to put out, right? It's Rolls Royce, and like the various entries on it there. You've got one of them so far, and I've got a couple of them in around this place, and I've been getting it for a while. And then the measured move on these sort of things, just off that inverted head and shoulders, huge, right? It's absolutely huge. People are not looking for this TA that's on the 3D. They're looking for something maybe up front, but it takes you way up there. Test your breakdown area before, and it's 200 and something bucks, right? It's 200 and something pounds, 220 maybe, and that's 100% rise from what it is now. Doesn't break structure and is on the cards and maybe happen soon. And if you like a lot of chocolate on your biscuit, Joe, we probably get along. So that's that. Do you do much non-TA analysis of companies you trade, or do you live and die by the charts? I live and die by the charts 100%, but I do lots of other things too, but then it's the charts, and so far, touch cherry wood, I live by them and not died yet. What else was we going to look at? That was RR, and we did CLF and we did RR, and we wanted to look at it a slightly smaller time frame, see what was maybe going on perhaps, and then get into the last 5 minutes. I've probably got 60 seconds left on this, not even really. 15 minutes is touching its highs. Touch of divergence there? No, not necessarily. It's accumulating up at this level again. That rocked round just there. That was fine. That was bullishly divergent again on this low being lower, and this move up. You expect to test the previous highs. I see this testing up at 99 something soon, and then going on. QL. Did we even do AMC today? I definitely meant to do it. Down 5.4% on the day. It's come down, tested this line here. It's above the 618. It dropped below the 236. That was likely to happen. Accumulating above the 200 period in the 15 minutes. In the 4 hour, you can see that it's below the 200. No, it isn't. That's a line that I drew. Like I don't know why I drew it like that. This is the inverted head and shoulders you talk about on this. From here to here, and you say, like, is it on? Yes, maybe. And then you look to see if it breaks through these levels, see if it's activated, and yes, it does, maybe. And then retesting it and around now is normal. This is above the EMA. There's like positive there. I'd like to see that go up, but I could see it coming down, dropping down there again, cresting there. What would that be? 35, and then see. Like, this is upped, but not as high. What's the difference with GME on that? Something similar. 178.19. Similar on the lower term time frames. Say that's 4 hour, but let's go down to 15 minutes. Keeping it on AMC for the last couple of minutes. Yes, it's not a great finish there. It's another inverted head and shoulders. There's another bounce off here would be good. Taking it up to around 38.93. Give me that in the last 5 minutes. Go for it, mate. Don't actually anticipate that happening because it's not a low, and if it drops break down there, you're actually looking at testing in the ground again. 37 bucks again if it doesn't hold here. But there is a reason for it too, and if it does and bounces quickly, it could go to 38 plus at the end of the day. Could be. You don't got much time for that. Never got that cup of tea. 178 spot 50. That's like it, right? It's 170 spot 84. Figurity. Come on, that's where it was that's where that opening close on the last 15-minute candle came in. We've got how long left? 3 minutes 35 seconds. This would all be a doji and a wick if we went back up there and closed, and do I think that's likely to happen? Yeah. 178.79 for the close. That would be good, but I don't see that. Aye, that's just caught there. Oh, it's not made it. It's not made it. Made on there. How many minutes are left? 3. 3 now. There's now 3 minutes. 178 spot 48. This is bullishly divergent, this low. This is ticking down, but screw you. Get fucking back up there, you stupid lying bastard. That's totally bollocks. Go, yeah, exactly, mate. Exactly. Fucking talking shite. And then, yeah, boom. Fucking right, man. Yeah. Fucking right, man. Do it again. Fuck off. Pardon me, this is not the way I meant to do this. Right, Tradespotting. I've been using scanners to find lists of oversold. Why is that chat so old? And I got new members. Sunk function. 178 tested that level. Boink. People weren't happy. People didn't like to see that. This is bullishly divergent. It's low. That's bullshit. Yeah, exactly. It's bullshit is what it is. Fuck. Yes. How's everybody? Keep going, Jamie. Yeah, right, cool, keep going. Yep, so here's 200 period moving average. We're on the 1 minute chart. You've got everything we needed to. We'd like to see this go on again. Here we go. It goes on again. Bumpity bump bump. Open close above the 200. See that open close above the 20 period moving average too. Very positive. You've got 20 seconds left for that to happen. Do I think that'll happen? Well, I think it'll finish. This is the test, right? That's the question. Do I think it's happening? I'm watching it happen in front of my face and talking about it a couple of seconds before it does. Bounce and that. See, and then yeah, so fighty, but it's quite obvious who's winning that one. There's a higher. This is divergent. Like, come on, 178 plus. That's what we're looking for here. Plus 178.84. That'd be what I'd like to see. And how long have we got on that? This is it. This is the minute of it. This is the test. There, boom, below, boom, about up, boom. This is it. More fun looking at 1 minute, isn't it, with the ups and the downs? See, this is bollocks. Why are you doing dropping below that? That's like not going to happen yet. Cool. Let's just fix that. And then this is the red when it doesn't need to be, so fix that. And, yep, boom, thanks. And now you open and close above that 200 period moving average in the next few seconds. Yep, boom, thanks. That's what it's going to do. And how long's left in it? 10 seconds? 10. Ah, look. Ooh, look. Pew, pew, pew. Stop it. I'm shooting it. Sorry, didn't mean that. And this is likely to be a wick. Sure. Probably is some form or the other. And there's Tyson's closing. Well, it's 178.54. So that's that. That's what it says. Let's see if it's real. 178.54. It's not changing. It looks legit. It closed pretty much where it started when we started talking about it. Didn't get that one. Would have been nice. Trying there was fun though. I enjoyed watching it. Cool. Tradespotting, can you please check RRU1.F chart by 5 year Niels van de Graaff? Yeah, sure, mate. I'll have a look there. What was it? The RRU1.F chart. 178.54 on fidelity. This got the people taking it straight from here too. The New York Stock Exchange. Webull, I'd say probably update that to the 54 figure. Likely that'll be updated, but as the minutes go by, and then we can turn on after hours and see what's happening here. And prices back. Prices, come on back up to 178, something higher. Like that's the 54. It's where it closed, even though this candle print seems to suggest lower. The price is finished above that moving average, 178.54. I mean, I know because I watched this candle close here. Right, this candle print is a bad print. This is a bad print, and it made my TA look like I got the last few seconds not completely accurately, when actually it turns out I did. So fix your fucking candle and that fucking dick. Stephen F. Tradespotting, hey Jamie, can you please comment on the 400 quid out of the money puts for GME that expired 2 Fridays ago? How come we haven't seen this reflected in the upwards price action? Well, they expired out of that was them gone after that point. I mean, they didn't weigh on price action as much, so we have seen a positive move, right? Went from 1.7, what was it, 2 Fridays ago? Jojo. 138, right? And then the previous Friday was 160. Was the low of that week, but actually it finished up at 179. So 158, 157, and price action in that move subsequently went up to like 194. That's a good 20%, like 18, 19, 20% on the move. As a reaction to the out of the money expiration, the weekly candle then when you're doing the TA, other things take over. I know the question, but other things do take over. And this being like finishing here with this sort of a wick on it, yeah, potentially this is a good thing, but also it's not bullishly engulfing, which it could have been. So then you're saying, well, does that come across 2 to 3 of the next subsequent weekly candles holding the 236 and whatnot? That's super important for that to happen. Going above the 618 would constitute one of them, and the next one on targeting these 1414s, that would be another one, would be overall bullishly engulfing even of the previous breakdown zone. That'd be really positive, and that's the sort of thing I think about when I start answering that question. Also, that money's gone. That liquidity's gone. They finished out the market. They lost their money. They lost the premium, and it affects their future abilities, right? Those people who lost that money, it obviously has an effect on them, right? It's a significant amount of money. And it came in at the low of this thing here, and it's just the sort of, it was here, it had one candle that told you in the midst of this battle that you were cool, everything was fine, and it was better than the one candle we've seen here in terms of the fact that it was bullishly engulfing. But in terms of its actual price move, that was 151, closed at 170. This is 158 closing up at 179. The same range, it's the same sound, it's the same guy in the middle of the battlefield waving the flag that you can see when everybody else is slashing and ripping and tearing at each other, and you can see just up there the horizon's pretty bloody, but there's your flag. And keep going, that's it again. That's what it is. Again. And then you got the 3 positive off the back of it, and that's what we want to see off the back of this too. 1, 2, 3. And it's looking forward, so those 2 Fridays ago, now you're looking forward to the expiries the 13th. You're looking forward to looking towards the open interest currently on the books. That's the question. Then the prevailing question is what's the August closes, what's the August strike prices, what's the open interest at those dates, and how do they match up with support and resistance? What do they look like at $192? What do they look like at $216, $214, those strike price? What do they look like at $250, those strike prices? And then you go through August with those things in mind. What do they look like at 260, 274? And then you go in early September and you're well, what is the strike price in it around these 300 and plus a little bit in these sort of times? What is the open interest above that crucial support and resistance? What is the open interest on those dates and around early September? And those are the questions you might be looking at. Whoa, look at that crazy chart. And Leptonic Tradespotting, I see you and Rocky get ticked off when mistakenly working with log charts on. Usually I work with a log chart on and will appreciate it, but every so often when I'm trying to do something different and I don't have it on, it does piss me off because I'll have wasted a lot of time. What is the purpose of logarithmic charts versus standard? Right, well, you'll see the technical analysis I do is based around, and so for example, there's a Fibonacci, and I use, as you can see here, fib levels based on a log scale. So I want my Fibonacci levels to be accurate, and I insist upon drawing them from wicks, not body closes, and using the log scale on the log chart. So the maths is right, because it's a maths, right? It's logarithmic rather than linear. So what that means is it's a relative to its own increases, relative to its own range, and it shows you a logarithmic increase. So for example, you understand this likely, but just in case anyone doesn't, say you're measuring just calling that V shape. Now let's say this here. It's already done that. Time frame's crap for it. Let's say you're on this one and you do that head and shoulders up here. It's not head and shoulders, Damie. See this inverted head and shoulders right there. Right, draw it down, take that there, and then you can see that range is 197 there down at 157, so it's $40. When you take it up there, the thing is still $40. You see how it looks like the thing itself gets bigger as I take it down here, and this is cause. Oops, I'm making a real crap simple point really badly. Like you see how it's now much bigger, and you take it down and it's much bigger again, even though it's still the same. Like it's still $40, 86, 40 odd, 40 to 80 odd, right? Still like the same size. That hasn't changed. That was still the same dollar difference up there. I just read it wrong. The size of the thing looks bigger because of the logarithmic increase or the exponential on the way down, and so well, it's logarithmic. Sorry, said that wrong. And so anyway, the maths is all set up to do my technical analysis way, and if I start doing things the wrong way and do it on the wrong things, then it'll all be inaccurate and look wrong, and everyone will be like, "Oh, you look silly in that." And so, if I insist on people doing it right, so it ticks me off because I would say to insist on other people to do it properly. So when I do it like improperly, I feel like that was really stupid of me. So there's that, like, and these are ones right now. Essentially, what you're asking is like not something profound. You just want to know like when does to use log and when to use linear, and when you use linear is like, you'll need to use linear if you want to use a scaled chart, so that every increase is the same as its subsequent one. So say for example you're using a Gann chart. That's all built on relative scale. Not relative, that's all built on a fixed scale. So you're going to first need to be on linear, and then you're going to need to lock the scale of your chart on top of that, so that when you do things like this on the y-axis, it affects everything equally across time on your x-axis, because it itself is a linear increase, right? It's a linear progression. That's what Gann uses. It uses like linear progressions, and so if you're measuring a linear progression, you really need to have it on a linear chart. So there's like that, and different types of technical analysis rely on different things, and on smaller time frames, people tend to keep things simple on YouTube for people watching along who'll have not necessarily have a log option on their charting software, and they'll say like, turn off log, I'll be on 15-minute, I'll not use the Fibonacci's, or they do, but they're like not set to be working with log scale, and then as such they're probably not really paying as much attention to them, because the subsequent strategies that you build on top of Fibonacci's nearly exclusively use logs. Wow, this is a long answer. Yes, that's the $2 to $4 increase will look the same as a $200 to $400 increase. Yes, it will. It'll be the same percentage move, but 2 to 4 might not look like. But would, yeah, you're right. It would. That's what you're talking about, and you're right to a degree there. Like, actually, like I'll show you, just show you exactly actually what happens there, because you're not completely right. Here is, $2.08 to. Right, I'll just make it easy on myself. 8, right? 2 to 8. And would be the same as 200 to 800, right? You'd think. Wow. Wouldn't you? Come on, mate. Where's 200? Right, so that's more or less what it is, isn't it? And it's not working out quite the same. You see, it does take you more than the two. Like, it takes you 199, takes you up to the 205. Moving it is especially in those small waves was not the point. What I was supposed to be doing was, I've just ruined that all, haven't I? Sorry. Let's try that again. Ugh, why am I doing it on this timeline as well? Like, there's 258 again. Sorry, I'm tired. I'll go down to 843. Ugh. And anyway, you can't see anything between them, but like, look, this is bigger than this candle here, and maybe that's just because I've drawn them so inaccurately or whatever. Anyway, like, I was kind of going off the point there, talk about like how candles are different like how lines are different sizes across different time frames, because it's about the relative percentage move. So 2 to 4 is thingy to thingy, and on a linear chart it's one way, on a log chart it should be the same. Should be different. Where is my other one gone? now? Has it moved? Maybe it has. Yeah, it has. It's way down here. There you go. There's the size of the thing now. You can see it on log. It's a completely different size. Linear, at an $8 line at 2 to 8, a $6 line at 2 to 8 is a $6 line. And on a linear chart there, it's the same size as a line that goes to $6 to $8 up here, right? But in terms of log, it's a percentage move. 2 to 259, or whatever. Like that's a percent. That's two different lines now drawn there. So of course they're going to look different. Ugh, Jamie. And you take it up, look, it's way smaller, right? There you can see that's how it was supposed to work the first time. As a percentage move, $8 up here is nothing, whereas a percentage move, $8 down here is 600%. So there's a 600% line, and this line is the same percentage of that big line as $8 is on this percentage increase of a move as that was, and this one. So like you see why it changes in logarithmic, like the math is different, and there's an example of it using like a thing that changes shape. So you can see it's wrong if you're doing it wrong, like significantly between that sort of like $2 and like 200, like that's significant. You'll be significantly wrong, and you have to use that other linear chart though if you're doing like GAN theory or other things that rely on that sort of thing. So if that's some sort of answer, Tradespotting, would it be possible for short hedge funds market makers to utilize TA indicators to build hype and then smash hype with the low liquidity? Is it possible to manipulate in this manner? Speaking towards GME. Short hedge funds slash market makers, like this it's very difficult. Like I don't like to conclude short hedge funds slash market makers, because I know market makers, lots of them, respect them. Some of them work on exchanges where like order routing happens, and they're very good people who don't do anything malicious and are doing a job which is exclusively about balancing their position and providing liquidity to the markets, and they work for companies that do a good service and don't exploit the situation. And that the ones I know and the people I respect have or do that. Whereas the short hedge funds, they shouldn't really have ownership over the market makers. This is a conflict of interest, and I hate the way that that's like allowed. And I don't think this Chinese walls idea is this at all like this bollocks, right? So but yeah, cool, right? I totally get where you're coming from with short hedge funds. You're asking me, can they use indicators on TA to build hype? Well, maybe, right? Maybe they can't use the indicators I use to fake things, because the indicators I use tell me everything that they're doing, and the indicators that like they don't want to do that. It's like you're overthinking things at this stage. If you think that like that market makers are going to say to people that this infinitely broad potential base of market participants, if you think that they're going to turn around and say, here's the opportunity of a lifetime, they're then inviting infinite risk, because who's going to turn up to take that trade? Like maybe the whole world does if the indicators are clear enough, at which point they're going to have to spend so much money to defeat them when they could have just continued to do what they wanted to do anyway. It's much more in their interest to make it look bad so that people don't trade, so that it's easy for them to push it down. You see what I'm saying? As opposed to making it look great and then making it expensive for themselves to then make it look bad again, in the hope that that'll have a negative effect on our psychology, when we've already demonstrated that that isn't going to. So they do things when it's at their best interest, like when it costs them the least, and so like the risk reward is still the same. They want to spend the least possible to get the most effect, because over time that's the way to operate, and not to double think about how they do things. But sure, they do push prices down at times because they want to paint things on the charts, or they definitely don't want other things to get painted. So for example, here, had this like finished actually above $198, that would have been an absolute nightmare for them for the rest of the week, because absolutely everybody and their granny would have jumped on this here rather than asking me questions on Reddit and Twitter and on the streams and all the what's the best entry, not whatever. People would have been really excited and jumping in all over the place, and they would have had to fight that, right? Because they don't want it at 200 at the end of the week this week. Those specific people you're talking about don't want it there, and they definitely don't want it up at 216, 217 to 222. They really don't want it up around there. And that's like the next stop if it had got past this one from the technicals. So they fight that stuff, right? And what you probably are like is like me, Ollie, and that you're a bit contrarian. You like to do things your own way. You don't necessarily listen to what other people tell you before you make your own mind up. And that leads you to sometimes having contrarian perspectives on markets, and say be perhaps dismissing some types of price action. When what it would be good to know, and what like experienced traders often do see, is that, and it's a good point to learn, is that if you're a contrarian person and you turn up in a contrarian marketplace, then you're already with friends, right? Don't look around at everyone and think they're an alien, because they're there for the same reasons you are, and price action is likely to reflect that. So counterintuitively, if you're very contrarian and you're drawn to contrarian assets, they tend to perform typically with regards to TA as opposed to atypically. And I know that's a sort of hard concept to get your head around, but Bitcoin's a great example of it. It's a contrarian asset traded by contrarian people. It's very, very good when you use certain types of TA on it. The indicators don't lie. They might give you 8 answers to one question, like an oracle, but then you get 8 other indicators, and if they all are giving you like the one answer among their all probable outcomes, and you add enough onto it, well then Occam's razor, right? Simplest explanation is usually true, and then that is a good sort of thing to say with regard to the point you make there, Ollie. And though also what you say is true, people do try to paint things on charts, and like the efforts that I make with TA are to try and demonstrate this is painted. This is these like sort of the approach I take to divergence, for example. Is often indicative of, like, I say, well, this is fake, this move here is crap, and this is likely to happen. So that's that. And I know somebody wanted me to look at something. I'm really tired. What was it I was supposed to be looking at? RFU for your boy. Ba-dum-bum-bum. What was it? Wasn't it? Was it just it's just the European Holdings? Is that all? Which one was it, mate? Let me get back there and find out. Where was it? Lipton, thank you so much for your help and explanation. I can feel a new wrinkle forming on my brain. Thanks to you. Hope it's all well and reasonable end. Wow, thanks very much, Lipton. I didn't notice that one at the time. Yeah, it was brilliant. That's great to hear. That's great. And Stock Motion became a member of Chump earlier. That was brilliant. And what did the message say here? Andy was right. Aye. He traded like he poops. That was right. And then the comedic thing before that. Thank you so much for that. Where was the chap? I thought it wasn't a donation. It was just a normal message, so I won't see it there. It was. Let me go back up, find it. Just so I've done it. Tradespotting. Hey Jamie, can you please comment on the 400,000 out of the money put for GME that expired 2 Fridays ago? I haven't seen this relative price action. Did that come in before that question? I answered that briefly, sort of. Niels van de Graaf. Hi Trades. Can you look at RRU1.f on 5 year? I don't have 5 year on this, but I can see. Aye. I've got months, and that'd be a range. I mean, I'll just look at it on a monthly, and then which one was it? Not that it won't make that much difference. I went back. RR. What was it? Not FU. RRU. Just looking at this one. This is the one you're talking about. Obviously, market's closed. What the hell? Is this the one you're talking about? How can it be? This only goes back to 2020. I'm not getting a really good chart on it, mate, to give you anything. And everything that is on it is just like lower highs, lower lows. as a downtrend, so perhaps that's going to try higher now, perhaps. I mean, you're not getting enough on this, and knowing that it's like, yeah, it has to capture, it has to open and close like above its open and close today. It has to do like that six centimos higher, open and close, and has to do it on the daily. It's there or thereabouts, and it's got a touch of a bullish formation coming in here. It's not got the divergence that we've seen on the things we've looked at, other things we've looked at today with regards to these two most recent lows. So the 236 might be as high as that gets in a continuation, in which case, what is this going to? Well, I don't know what's up with this thing, right? I don't know what's up with this thing. You're not getting enough of a reading off that, and there's no point in me even saying that number, right? Because it's all just recovered this point, or about to. And this is like a sort of thing you'd have to look at in a bit to get anything out of it. If you're taking a trade down here, then sure, right, take some profit and see how it goes. If you've got more information on your chart than me, great. You might see all sorts of around here, and anything in this range. I mean, it's just annoying. Why don't you give me more information than that? That can't have only launched this thing. Is it European Holdings that only launched in 2021? In which case, that was a shit time to launch that. Maybe this is something else, though. I don't know what type of this is exactly. Is it related to Rolls Royce? It is a Rolls Royce. What is it? Is it the Electronic Technology, Aerospace and Defence? I know all that. What is this thing, though? Anyway, what do I expect to see happen here? Right, it's below that 236. Open and closing below that 236. It needs to get above it. That's a gap. It's going to have done that. It's filled that on the wick. It's got a gap there. Nope. Oh, yeah, a tiny one. Everything else is filled. So drop that in and then go down here and say, right, if you can cover the 236, will you make it there? Well, that's alright. I mean, that's such an obvious buy here. Sure, right, sure. Yeah, it's just very important for lots of reasons, this area. We want it above 128, and I wouldn't be surprised to see it at 106 again. That's that. Okay, I hope that helps, right? I'm actually exhausted and back's killing me because the state of this freaking dinner chair that I've been sat on for the last number of months is about to actually chop me back in half, so I'm looking forward to changing that. I've picked out a lovely Amazon effort that'll look to get soon. Close enough is good enough. Nice one. Close enough is near enough, and near enough is good enough. Tradespotting. He meant RR.1.f, which is more data and seems to be different thingy. It's got more data, has it? That would be good. If I had looked at that first, I'd have the mental energy to look at I would have done it, but I've expended it, and I've got a headache here to there. So I'm gonna have a cup of tea, and I'm gonna go do that. And the F is Frankfurt. Cool, good. Yeah, this is SWB. So here's your options. Star R1U, and there's your The choice of German exchanges to trade it on. I've already checked SWB. There's this. Here's this. Just because we said it. Do we have more info? Yeah, we do. Oh, good. And then we wanted it on the longest possible timeline. Now it's doing it again. It's got 5 years of data, but obviously I've not got a 5-year chart. 2014. Wait, is it? 2014, yeah, to now. So there you go. It's more than 5 years. And what can you tell from this? Well, it's absolutely screwed, isn't it? It's like it's done nothing. Although it's come in and tested its lows, there's hugely bullishly divergent. Part of the reason for this was because of the debt renegotiation and whatnot, and like that was the final. That's like the. I mean, the RSI is totally different, and pricing is the same, right? It's like not I've got a positive slope or whatnot, but it's a monthly time frame, weekly. It's potentially gonna go spring a wee bit on this. This has potentially got a bit of spring on the top side. Yes, it potentially has. Obviously, it's tried the once. It's had this. I think that's a significant level. See this above 1.9. See this above 2. Then it would be interesting. Does it maintain that? If it can open and close above 220, if open and close above 233, then, and it could do that, right? It could easily do that. Could certainly make its way up there in a number of in a couple of weeks. It could do that easy peasy, and then I could see it doing something extra. To see it going down again from here, it's like, well, this is not giving you much for that in terms of trading. There's like little or nothing you're going to get from this chart. It's crap. Even if there is 5 years on it, it's like it's kind of crap. There's the 8 to 10 months of this. Dunk. Increasing that. Sure, there's a top side line here, but that's all much of a muchness. It all comes in way higher. $3 something. An RSI getting up there again, that's not all that crazy. And could price action go half that way with what the RSI looks like it could do easily? Yeah, it could do easily. So this looks alright, even though the chart's crap. Like, that's a crap ass chart, man. That. And you get a lot more here. That move. Like, there's huge divergence there in a 4 hour. 886 retrace, back down to 236 again, and a bounce. Is that what's happening here? Eight six 618 failed, down 236. Yeah. Bounce up again above the golden pocket, close down here above the 0.5, go on again. Yeah, that's not exactly accurate, so I suppose it could have even been better to you. But obviously these flip side to side and see what's going, that's what it's going to do, and we'll see here. It's in a period of flux. I'd like to see it not go lower than 1.12. I do think it's got a potential to go higher, and on the end of that you can see like 127, 131, and then still that doesn't change structure or do anything. It would be perfectly natural to see it try that. I haven't tried low again and failed to get any lower on RSI than it really has been before at previous lows. Lower price, not as low. Well, it is lower here and it is there, but this back here is different again. 4 hour, you can't go all the way back there. So it's still in flux, this thing, and is this related to what we're looking at? Again, you're trading it in a different currency, so these things all have some effect. I'm going to see it above 112, 113, 115, at which point you've likely got a 10% move on it again. 20% less than 20, more than 10. Take you up to 135. Oops. 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 Everything's disappeared. Here? Phew. Right. So, what did I drop in a horizontal line? Did I not get it in? No, I didn't. 135, was it? Chat around there. I'm not getting it again. Right. 115, 135. Expect to see some testing around these levels. It has put in what looks like a lower low. It hasn't necessarily put in divergence. So when it comes back up, you want to see it get above this 236. Hasn't managed to do it yet. 115, you want to see it above there. That's not even significant really, then going on to 135, so it may happen quite quickly and then retrace down. We'll check it again. But saying that, it's all really about testing. It's all going to follow what happens on RR dot, give or take, what happens with the pound. So that's that. Thanks, Tradespotting. Appreciate it a lot. You're welcome, Niels van de Graaf. You're welcome, but I'm now exhausted and tired and exhausted, so I'm going to stop. Quiet, I'm going to have that cup of tea that I meant to have. So what happened? Well, the chat revenue today was 69. 69. Awesome. That's cool. Spot on number. That's really good. Also, 4 new members. That's really positive too. Thanks so much, everybody who contributed like that. It's really appreciated. Also, what I can tell you is I have created the stream for tomorrow. It's now scheduled. Tomorrow's live stream is now scheduled, and this one, as and when it ends, if you stay right till the end, you will be redirected live to tomorrow's upcoming GME close. Is that correct? Scheduled 28th of July 2021. That is correct. And today's, let me triple check because I'm now tired. That is the 28th. Is tomorrow. Is all scheduled. Why is showing me the wrong thumbnail? Anyway, scheduled it's gonna redirect you there, and tomorrow's stream is already up. So following those bits of advice, you can click on it there if you want and set a reminder, or you'll see it. Hopefully, I don't know if YouTube are going to tell you about it. Some of it it'll tell some of you and not others. So that's that, and I've got over 500 likes, which is great. It's the first time we've had that for a while during the live, I think. So thanks so much, everybody, and 4 new members. That's really a huge deal. Thanks so much for supporting me and what I do here. Thanks again also for supporting Rocky. As you can see on the left hand side here, you've got this side panel that talks about how I was supposed to cover more AMC than I did today, but I did a really good, I don't know if it was good. I did a lot on GME, so hopefully that's helpful. 2 to 3 PM BST, British Summertime. That's when you catch Rocky until he's fully recovered, in which time he'll be moving that that finishing time later, and as we get back into the swing of things, and then I'll also move 6 to 9. I'll be going backwards in time, starting sooner, and then we'll meet in the middle somewhere and keep you covered throughout the day with content. I think that's a plan. But in the meantime, feel free to get used to seeing me between 6 and 9, because that's when I'm coming back tomorrow, the next day, the day and a day after. Tradespotting. Finally, I appreciate scheduled streams. Really helps to plan my day in advance. You're welcome, Dragon Slayer. 6 to 9, that's me. You had me 6 to 9 today. That's obviously went on a bit longer. It's 20 to 10, whatever. But so this doesn't matter, right? The end time's not as important. I don't mind staying on a bit longer at all. I enjoy it really, and when I look back on it, if it's an abrupt end, I'm like, I kind of miss those guys for a while, and girls. So I don't mind about that. I will always be here at 6 this week, though. Always stream will be scheduled in advance from now on, a whole day in advance from now on, because I'm ahead of that. So thanks. And what else happened? Well, we had loads of new members. 4 new members is a big deal. All in one day again. That really is a big deal. And thanks very much. Thank you. And we had some donations from people and I think I answered some questions. Good ones. Don't know. But anyway, let's roll the credits and see what happens. Credits rolling. and my screen didn't get bigger when I tried to click the button to make it bigger, which is not what I wanted to happen. Please no bigger. Okay, thanks for supporting the stream. Super chats. Daniel Groves, Daniel Assange, Advanced in Apes, Space Monkey, Aaron Pauline, Paul B, JT858, King Noah, Andrea H, Old Capital Comics, Andy A, Lipton Inc. And then look at all the subscriptions. Wow, amazing. Thanks so much to all you guys for subscribing. That's really appreciated. Doomslayers. 4 new Doomslayers. Aaron, Rob Davis, Daniel Groves, Stonk Motion. Wow, what a collection of Doomslayers you are. Thanks and welcome everybody. Really appreciate everyone who signs up and everyone who views and likes. So hit like, let's hit like please, and everyone who subscribes and everything. So thanks so much and thanks for tuning in. I know you could have been anywhere and there's lots of other people that cover this stuff and they've all got their merits and some of them have got really nice personalities. So even if their TA is a piece of shit, I understand why you might tune in and watch them. And I don't want to take you away from people you've got a good relationship with. So that's not what I'm here to do. But if you do tune in here, it's really appreciated. Thanks. And yes, my TA is better than most people's, and I'm also like much prettier to look at. So you should really be spending your time here. You know, you've only got one life. You should spend it with me. See you then tomorrow at 6. See you in Rocky stream. Actually, obviously, I'll be in the chat then. Jamie, you're a good one. All my respect. That's a lot of respect. You have all of mine too. As you should in return. Thank you very much. Flocky. Man on Earth. Have a good night, Jamie. Have a great night, Man on Earth. You're a very nice chap. Thank you. I will. And I may not just saying that because that one message. Obviously, myself and Man on Earth have obviously spoken before. Simone. Lol. Yo, Simone. I hope you got the Discord link. I know you were looking for it. Maybe Rocky will give you one. Maybe won't. Who knows? I don't know. But yeah, GTA brings the boys to the yard. Hi, boys. Wait. Ciao for now. KC, love you, man. Right, love everybody. Love everybody. Thanks so much for everybody. Thanks so much. See you all tomorrow. Right. And if